This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
We survived yesterday. Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, and Michael Barr yesterday was absolutely phenomenal with that news flow.
That was a news-heavy day, as they say.
He'll be covering Roaring Kitty or Hello Kitty, whatever it is, today on GameStop. Sweeney's barely recovering here after the amount he threw into the lodge at Vail this winter, and they couldn't get it done. But it's Jobs Day. I think I was advised by our vast management team, it's almost a normal Friday, Paul?
It is. I think it might be. But, I mean, again, this change in non-farm payrolls, consensus is 180,000, Tom, kind of in line with what we've seen over the past.
What if it's above? Everybody's
I don't know.
Gloom and doom, and what if we get like 220 or...
Yeah, exactly. I mean, the unemployment rate is forecast to be 3.9%. That seems... Man, it's about as good as you can get.
Well, we say good morning. We survived yesterday. Hand and rested. Paul Sweeney's at least hand and rested. I'm not, but... good morning to all of you with Jobs Day coming up. Lots going on. A great lineup of people, some of our regulars and some new. Tiffany Wilding, a regular in the 9 o'clock hour. Lindsey Piegza with that huge higher interest rate call on the Fed. Good to get an update on that. In a moment, Cam Dawson on your need to go long the market right here. We're on YouTube. So is Roaring Kitty.
Yeah, I know. That's what I hear.
Push us right off today. YouTube, subscribe to Bloomberg Podcast, search Bloomberg Podcast, I can talk. And of course, on your commute, Apple CarPlay is one way to get it done. We're in the Interactive Broker Studios right now with your Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, we have futures. Well, little change right now on this Jobs Day. You said it comes out at 8:30 Wall Street time, expected to show employers boosted payrolls by 180,000 last month, slightly more than April, with the unemployment rate seen holding steady. We'll head over to the bond market now. The 2-year yield 4.73%. That's little change, and the yield on the 10-year 4.29%, and that is little change. Commodities. We'll head over to oil. Prices headed for their third straight gain. Right now, we Brent crude $80 a barrel, WTI crude $75 a barrel. And taking a look at spot gold, lower at $2,331 an ounce. Moving the markets, you touched upon it. Let's go to GameStop. Those shares were up about 20% not too long ago. Now they're up 1%. That's what they got. Keith Gill, Roaring Kitty, expected to give the live stream today. Meanwhile, the company reported first quarter net loss year to year, less than expected. Q1 net sales missed estimates. It also said it may sell up to 75 million shares of Class A stock. We'll head over to Taiwan Semiconductor Manufacturing. They're up 0.2 right now. May sales rose 30% thanks to strong demand for AI, also a recovery in some of its consumer electronics. And TSMC, big because they provide those semiconductors to NVIDIA, Apple, Advanced Micro Devices. Then we'll have it over to Lyft. They kicked off their first investor day yesterday. Said it's expecting 15% growth in bookings over the next 3 years. Their shares up more than 3%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciate it. One note, the president meeting with the leader Zelensky of Ukraine. They're, Paul, right down the street from our office, Rue Scribe in Paris.
Yep.
Caroline Cohn and I here went over to Paris Baguette to get them a petit
very
déjeuner.
good. All right, excellent.
Get them
full service.
We welcome Cam Dawson with us right now with New Edge on this stock market into the weekend. Are you enthused? Can you acquire shares on this Friday?
Well, I think that you have to respect the amount of momentum that continues in this market and that the trend is still very much up. That doesn't mean you can ignore things like valuations being stretched, sentiment being stretched, positioning being stretched, all things that suggest that most people are pretty much all in. However, again, it's respecting the trend in the near term and not sitting on the sidelines as that trend continues to drift higher.
But the reality is, I mean, we're still in a world where some of these big tech names, whether it's in NVIDIA or others, are really driving this market. And I saw in your notes something really cool. Only 50% of the S&P 500 is above its 50-day moving average. So, I mean, the breadth still isn't where we'd like to see it, is it?
So much for that broadening out trade. It simply has not materialized. And we saw it for a second and then it evaporated.
Yep.
So 50% of names above their 50-day moving average. You saw the equal weight S&P 500 hit a new relative low this week. The average stock cannot keep pace with the mega caps. You've also seen a big deterioration in the relative performance of those broadening out darlings. So your industrials, your energy, materials, financials, all places that have given up their year-to-date outperformance. This suggests it's still an incredibly narrow market.
Well, we're seeing the narrowness. I am seeing, I guess on an annualized basis, breadth in an S&P lift. Can you predict, I guess in a second or third leg of a bull market, an expansion to some form of breadth?
Well,
Like double-digit return?
I don't know if I'm predicting it, but I will argue that the market is already predicting it. Because if you look at earnings estimates for 2025, what they have is a big deceleration in those Mag 7 names and a huge reacceleration in the everything else part of the market. And the earnings estimates are pretty high. They're $277 a share for next year. So to your point, Tom, I think we have to see breadth in order to justify where those earnings estimates and thus valuations are.
I mean, it's a signal of a healthy market, not hello. What do you think of Roaring Kitty? I mean, do you look at this as malfeasance of some type, or is it just something brand new for Gary Gensler to think about?
I don't know if I like the stock, but I know I like the cats. If I think about why we're seeing this kind of market behavior, it is a reflection of risk appetite and liquidity. And I don't know how much more to read into it other than to say there is plenty of liquidity sloshing around and there is plenty of appetite for people to put risk assets to work, which is why you're seeing things like GameStop as well as other speculative type of companies do well.
Exactly. It's just a new speculation.
Yeah.
They got a laptop,
Yep.
and they're trading 47 times a minute through Robinhood, right?
Yep.
I mean, it's a generalization.
It feels like it. I mean, it feels just like one of those little pieces of the market that just gets away from you. You don't worry about it too much. We'll see if they can actually issue some stock, Tom, 75 million shares, and where the market really is for that. Okay, so what are we going to get from our Federal Reserve next week? What are you looking for from our Federal Reserve? I think the expectations are kind of low. We're not going to get a whole lot.
Yeah, we certainly won't get a cut next week. That's not being priced in at all. I think watch the dot plot. That's where we will likely see...
Dots go on the Bloomberg terminal.
Dots go.
Yep.
Where we see a revision from the 3 cuts at the median to likely 2 cuts at the median. Big whoop, but I think it leans likely hawkish.
Into the weekend, we're in this wonderful seminar I did yesterday with Dara Meyer, Alan Ruskin, and company of Invesco. In the seminar, everybody agreed we're still in the range on interest rates. If we break down, we have a moldy jobs number today, whatever. If the 10-year real yield breaks down, the Sweeney 2-year yield breaks down, if they break down, what do stocks do?
I think that bonds will rally because yields will fall.
Price up, yield down.
Initially, stocks might rally, but I think the challenge is that if we look then out a month from now and we start pricing in a much weaker jobs market, a deteriorating growth environment, that challenges where GDP growth and earnings growth is. So maybe your initial reaction is a rally, but I think that those growth revisions would actually cause it to be a
Paul,
weaker response.
Should we ask her about Paramount?
Oh my goodness!
Please don't.
Please don't. So where are you looking today? What's kind of whether it's equities, fixed income, where do you see the best relative value these days?
Yeah, we're still finding opportunity within the equity market, and we're starting to look into those areas like value, international, and mid cap, but incredibly selectively. We don't think you can index those areas. There are lots of very weak companies, poor balance sheet companies. So if you can be an active manager finding high quality companies in those spaces, valuations are still not so stretched where you're taking on too much valuation risk like you are in growth.
Here's a headline. I missed this yesterday, Paul. Paramount's rival bidders include Patron Tequila billionaire.
It's almost getting
That's
to the
a
point.
real headline in the Bloomberg.
It's
Party
almost
on.
getting to the point of being embarrassing that this is what we're talking about.
Should we
for
break out
Paramount.
the Patron for
Yeah, exactly.
before we get to Lisa's newspapers?
Yeah, I don't know. We'll see how this
Kev
goes.
Dawson, thank you so much for getting us started this morning. It is Jobs Day, and we'll give you that data here in about an hour and a half. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden met with Ukrainian President Volodymyr Zelensky in Paris. as Kyiv's army endures its hardest days of fighting since the early weeks of the Russian invasion and prepares for what officials say could be a tough summer ahead. The United States is Kyiv's biggest supplier of wartime support as Ukraine tries to fend off an intense Russian offensive in eastern areas of the country. Meanwhile, former President Trump has called President Biden's executive order on the southern border, among other things, meaningless. ABC's David Muir asked Biden about Trump's criticisms.
He says we have a debate coming up. Biden's executive order is weak and pathetic.
Is he describing himself?
Today, President Biden continues to mark 80 years since the D-Day invasion during World War II. Biden will visit the 100-foot cliff scaled by U.S. soldiers in Normandy. Former Trump White House aide Steve Bannon has been ordered to turn himself into a federal prison starting July 1st. Bannon refused to comply with a subpoena issued by the House January 6th committee. The former White House aide was convicted of contempt of Congress and sentenced to 4 months in prison. Outside the courthouse, Bannon claimed this is a part of a long-running attempt by the Justice Department to shut down the far right.
All of this is about one thing. This is about shutting down the MAGA movement, shutting down grassroots conservatives, shutting down President Trump.
A 3-judge appellate panel last month rejected an earlier ruling from the judge who presided over Bannon's case and said that he could stay out while his appeal was pending. It's a big night for fans of daytime television. It is the 51st Daytime Emmy Award show. 3-time Emmy winner and current nominee Scott Clifton, who plays Liam Spencer on The Bold and the Beautiful, says it's a special year.
This one's really cool because it's not just me on our show nominated. There's 3 of us in the same category. It's myself and Torsten Kay and John McCook.
The show will be aired on CBS tonight. Global news, 24 hours a day and whenever you want it. With the Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, we were raving about you. You're out lecturing interns, and we were raving about your work yesterday. The news flow has been so crazy. Paul, I haven't even mentioned the NBA.
Yeah.
And when I look at those numbers, doesn't the salary structure have to completely change?
Well, I mean, I've recently thought, I can't believe these broadcast and cable networks can keep paying these rights fees, which in fact would put the pay structure of a lot of these leagues at risk. But what happens? The tech companies come in, Amazon comes in, and you're going to start seeing more of these technology companies with bottomless pockets coming in, sending these rights ever higher
do
yet again.
Do you assume, and Michael Barr, do you assume that the players get their piece of the action?
Well, yeah. I
mean, like 15 million is 25 million the new 15 million?
Oh, of course, yeah. I mean, if you don't have a salary cap, then there is no ceiling because these rights fees continue to go higher. And as we've known, the real economics of these leagues is driven by broadcast rights.
Right.
So.
And I'm not up to speed of this, but you need to see Charles Barkley go over to whatever the new is, right?
And how much is he going to get paid to go wherever the new place is? But TNT has been the home of the NBA for 30 years, and that. Where's that going to go if Warner Brothers Discovery doesn't keep the rights? And that could be a real issue for a lot of folks. But rights fees, I guess the simple math is they always go up, and the value of these franchises always goes up.
Remembrances at D-Day continue today. We'll have much less for you. The schedule is of preparation for a state dinner in Paris. I believe that's tomorrow. But we'll continue to keep an eye on what President Biden is doing in Paris. There's no space launch today, right?
Not that I know of.
Did you notice after we left, it was a success?
It was. And
I literally have goosebumps right now.
It's amazing. It's just amazing, some of the new technology.
Keith Cowing, thank you so much for being with us with NASA Watch yesterday. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, little change as traders wait to see if U.S. jobs data lock in those bets on interest rate cuts by the Fed in the coming months. And what follows policy easing from the ECB, also Bank of Canada, JP Morgan Chase, Citigroup, they're still predicting that the Fed will ease next month. We'll head over to the bond market. The 2-year yield, 4.73%, little changed. The yield on the 10-year, 4.29%, and that is little change. Few companies making news. We'll start with Tesla. They're down about 0.2%. An investor sued to challenge a proxy vote over whether the company should move its corporate home to Texas and also reapprove a $56 billion pay package for Elon Musk. Then you have Samsung Electronics. Its largest union went on strike for the first time. That was overpay. They plan to resume normal work hours next week. And finally, the executive departure at Stellantis, down about 1%. The former head of Jeep, Ram brands, Jim Morrison, he's left the company. This is as the automaker deals with a lot of swelling inventories, also sluggish sales over in North America. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Greatly appreciated. Paul, can you imagine growing up in Austin, Texas? I mean, you're 14 years old.
Cool
You got your fake ID.
Sure.
And you're sneaking in to see asleep at the wheel.
Yep.
You know, I mean, that's what you do in Austin when you're 14.
Mm-hmm. Absolutely, we did.
Did you read my biography?
Joining us now from Austin, Texas is Morgan Stanley's Ellen Zettner. And Paul, you led the show with this. It's on a confusing jobs day. I'm as confused as you are.
So, I mean, Ellen, we're going to get a jobs number today. How does the Fed think about the labor market here? I mean, the labor market seems about as good as it can get. I know we're concerned about the consumer and certain areas of consumer spending, but the labor market, is it as strong as it appears?
Yeah, I do. I do think it's as strong as it appears. Look, we have a lot of labor supply out there, and we should be creating a lot of jobs. And I think that's a realization that the Fed has come to over time, and we've come to over time as we've gotten new population estimates, new labor force growth estimates. Whereas the Fed was concerned that the labor market was on fire, jobs were on fire, low unemployment rate, really tight labor market. We've learned that it's not so tight. It's actually much better balanced, even though we're creating a lot of jobs. And so I think they've set jobs aside for the moment, especially amid slowing wage gains, and as in terms of being concerned that it might be a tight spot in the economy.
So if we do get a kind of inline kind of jobs number today, something that we've seen over the last several months, how does the Fed look at that, do you think?
I think that's great. That's fine.
They'll sit on the sidelines?
Yeah.
Is that kind of the...
Yeah, they'll sit on the sidelines, and market participants will say, okay, fine, we've gotten past that. Let's look to CPI next week.
Right, you get your bulletproof vest on. You're going into a cross-asset meeting at Morgan Stanley. Andrew Sheets is hyperbolic in London. Mike Wilson's doing what he's doing. You're telling me a 220 statistic. You're telling me a better than good private report. But the bond market is showing at the bottom of a range on yield that, I'm sorry, this is a tipping point. You're saying in 1 hour and 15 minutes, it's not a tipping point, right?
No, I don't think it's a tipping point, but I think that so here's this is funny. Do you guys talk about the whisper number?
Yeah.
Sure.
What is the whisper number? What do you think it is?
I don't know.
I never ask. I don't play the game, but there is a whisper number.
Do you know why it's called a whisper number?
Yes.
Because someone whispered it.
Yeah.
Okay, but is it sub 150?
Yeah, the whisper number I think is talking with clients, talking with our trading desk, somewhere around maybe 120, 130.
Exactly.
Yeah.
And you're going completely against that.
We're going against that.
Why?
Because we don't see that. Earnings transcripts show that companies have not slowed their hiring tremendously. We're not seeing a lot of weakness in other labor market indicators compared with prior months. We do see that there are going to be some areas we think of strength. I think the difference of opinion when I talk with others, that other forecasters I really truly respect on the labor market that do have something on the order of, say, 170. It's more of that they believe that the positive weather that we had boosting payrolls earlier this year, that there's still some payback there. And there is some concern, which I do think is legitimate, that you get some slowing in business services. Maybe that's home field advantage because we sit here in business services in New York, but some concerns that there would be some slowing there. But I don't think that look, I think 150, right? 150 to 200, nothing much has changed. Job gains are fine. should support the consumer fine. I think you get lower than 150. It's going to build on this tone from investors that has just begun to roll of, is the economy really as strong as we think? And it's really snapped to, and just like the last week to week and a half in my conversations, and now everybody's like, ooh, maybe the economy is not as strong as we think. Maybe it's a lot weaker. And so now we're looking for any of the weak data to confirm that. And so I think below 150, you'll have the market take that and run a little bit with that, maybe price in some more risk of a July cut. And then what if you get below 150 payrolls and you get a downside surprise on CPI next week? Even though it's during the meeting itself, right, that can change the tone of Chair Powell during the Q&A.
We're going to make some news on a Friday. Are you suggesting, given that scenario, not your prediction, that we could see a Fed adjustment for the meeting next week?
I think that it can affect the tone, and I think that it would affect investor positions.
Right.
Affect investor positions that are assuming, hey, maybe July is a greater chance than we think.
I don't know if you're writing about this weekend, but to me the great thrust is the ECB cut yesterday, but did not establish a Greenspanian measured, which is religion in America. Can we cut in America and not identify a measured trend?
Yeah, I think that's exactly what Powell would want to do, full flexibility. And Bank of Canada did it as well.
Yeah.
Bank of Canada didn't give an indication of how slow or how fast. Lenoy Dujon on my team covers Canada. I mean, we were patting him on the back and said, great for you, Canada's in the news today, when they were the first to cut.
In honor of the wonderful Ken Pruitt, we've got a Segui here. Now, in June, you got to go to Great Slave Lake in Canada and lake trout. I mean, it's 2,100 miles a day. Have you ever done that? Have you gone up to Canada?
Not fished Canada, not done lake trout. Well, I have done lake trout in Chile. You can get some really big trout, lake trout. I have not done it.
The size of your leg, that's Ken
Pruitt's
thing. How big is a lake trout?
Lake trout, well, in Chile, 32 inches. It's really
almost
big.
3 feet.
That's really big.
Do they bite?
Do they bite? Not me.
No. Okay.
Maybe the guide.
What lakes in Texas do you fish?
Texas, I grew up in deep East Texas fishing on a dock for catfish. You ever smelled blood bait? It's nasty.
No.
Yeah, it's nasty. But catfishing, you see I dropped the G. It's catfishing. And that's how I grew up.
Who'd you listen to in Texas? I mean, Light Sweet Crude is doing a tour down there, Joe Weisenthal, but in East, that's where Don Henley came from.
Is that right?
Who'd you listen to as a kid in Texas?
I grew up in the 70s. It was Crystal Gale.
Crystal Gale.
Yes. Yeah.
Yeah, okay.
Dolly Parton.
Do you realize the percentage of
in
our
Austin, of course, it was Willie Nelson.
Crystal Gale was gospel.
Yeah, absolutely.
Willie Nelson all the way once I got to Austin. Yeah.
Ellen Zentner, thank you. This is fascinating.
Yeah. Have we even covered the data?
No, we don't need the data. It's Bloomberg Surveillance on YouTube. And,
it's a Bloomberg terminal.
Yeah, you know, it's like, but seriously here, I thank you, Paul. You got a whisper number of 166, right?
I mean, it's just moving around all the time. So, but again, you know, the consensus is 180, the whisper's 166, moving around all the time. But
and you're above this.
We're above it at 220.
Nice.
Yeah.
Wow.
We had Mike Wilson in earlier this week. He says you're on speaking terms. Is that true?
Of course we are.
Okay.
Yeah.
Just want to, be sure. Steve Roach invented this, and I love Morgan Stanley because any disagreements they have are visible. It's no one's on the same page, which I love.
Yep.
Like Andrew Sheets going to have his own voice, and Ellen Zentner with their great leadership.
In my world of TMT, Morgan Stanley was always awesome. Bankers Research.
Absolutely.
Yeah, they were good. I beat them most of the time, but they were good.
If we get a 220, you got to come back at 8:32. Tell Morgan Stanley away. We'll get you on the phone at 8:32. Ellen Zentner there on Lake Trout in Chile, and also, I say Chile. I'm an amateur. It's Chile if you're fancy. And on Jobs Day here, and I really got to say, after the news flow yesterday, it's sort of a joy to focus on Jobs Day, which is what we're going to be doing. Futures at -5. The VIX still sets it all. Thank you, Cameron Dawson, for getting us started. 1286 on the VIX. I look at the 10-year real yield as Ellen Zentner does, 2.01%. We're 1 hour away from an important labor report for America. Good morning on YouTube. Search Bloomberg Podcasts. Subscribe to Bloomberg Podcasts on your commute, Apple CarPlay. Safer, better. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures this morning. This is ahead of key U.S. payrolls data. Non-farm payrolls expected to confirm a cooling labor market consensus, calling for 180 jobs added in May. We'll take you over to the bond market where we have the 2-year yield at 4.74%. That's up 1 basis point. We have the 10-year yield at 4.29%, and that's up 1 basis point. Want to point out GameStop shares reversing that earlier climb. It was up to 30% at one point. Now it's down 8%. The company said it's going to offer and sell up to an additional 75 million shares of Class A common stock. And this news comes on the same day that Roaring Kitty expected to go out on the live stream this afternoon, noontime, in case you want to tune in. Apple shares up 0.1%, developed a new app. It's called Passwords. Sources say it's going to make it easier for customers to log into websites and software. It'll be unveiled Monday at its Worldwide Developers Conference. And finally, Netflix shares are down about 0.2%. Shareholders rejected an investor proposal, urged the company to divulge more about its use of AI. And then you have a side note, Netflix facing a defamation lawsuit. It's by the woman who claims to be the inspiration behind that central character in the series Baby Reindeer. That is your Bloomberg Business Flash. Tom and Paul.
Thanks. You want to comment on that, Paul?
No idea what she was talking about.
No idea what she's talking about.
Baby Reindeer, you know, the Netflix series. It's about this comedian, and he has this stalker, a woman, and she is supposedly that real-life woman behind it.
Okay.
So.
Boy, just too
Gotta
much.
check it out. Weekend viewing.
She's a celebrity lodestone. It's like on the edge of Scarlet Fu. Lisa
Exactly.
Mateo, thank you so much. Paul, what happens when Hello Kitty begins to sell his stock? How does he sell it? Does he?
Well, first of all, I'm not sure what he owns. I don't know what he owns. I mean, we don't know what he owns, and we saw that screenshot of
There's options and long or whatever.
Well, again, I don't think anybody really knows what he owns, and the real test for this will be if the company comes out with some stock here to sell 75 million shares registered. Where's the market for that kind of size?
Into the jobs report in 59 minutes. Blake Gwynn is with us, RBC Capital Markets, head of U.S. rate strategy. Blake, how do you synthesize the jobs report here in 59 minutes into what rates have done? Price up, yield down, 10-year real yield 2.00%. Check that, 2.02%. Blake Quinn, how will you use the jobs report today in your study?
Well, yeah, as far as how the race markets have kind of synthesized it coming into it, I do think at least some part of the rally that we've had over the last week probably incorporates some pessimism on the jobs report. I mean, I think there's a pretty clear leaning going in here. Most of the people I've talked to, the conversations kind of skew around, what happens if we miss? What happens if we get these kind of low prints? Very little concern for what happens if we get a beat. So I think some of that pessimism's probably been priced in this rally, but I would say it's only a piece of it. I think, it was only coming out of the Memorial Day holiday. We had a big sell-off in the other direction. We had this, this big bear steepening, and everybody was kind of scratching their heads trying to figure out what was driving that. We were talking about auctions, consumer confidence data came out, but really no kind of smoking gun there. And then the next 2 days, we, rallied right back to where we were. So I think things are very choppy right now. I think we're in a very technical environment. I think the fundamentals are, almost in a way taking a backseat, but I think that changes a bit today because this NFP print, I mean, we're sitting on some of these kind of key technical levels and rates, whether it's in 10s and 5s and kind of cut pricing for the Fed for this year. And I think NFP and I think also CPI and FOMC, I think those three events are going to go a long way towards kind of defining what these ranges are going to be for the first half of the summer here.
So, Blake, that's kind of where I wanted to go. I'm just looking at the U.S. 10-year Treasury. We're at 4.3% here. Kind of what it feels range bound. I mean, it kind of feels like, I don't know, 4.25 to 4.5, maybe a little bit above that. And I know that some folks are saying above 4.5%, then maybe, then you could go to 4.7 or higher. How do you think about the technicals here, the ranges here?
I think we've been hanging out at that level for the last few days because I think markets are trying to figure out whether we're dropping down into that lower range or if we kind of reestablish the range that you were just mentioning that I think is held, that held through March and April. We're trying to figure out if we're still in that range or if we're hopping down to the next one. So I think that's why we've been hanging around very tight with these levels over the last over the last like 48 hours or so.
Dumb question. Can you see if there's a big bet in full faith and credit? Is there a bet right now into this jobs report on the direction, price up or price down?
You know what? That was, I think, a topic of conversation last Tuesday and Wednesday. So every time we get these kind of big bear steepenings, there starts to be questions kind of coming in and bubbling discussions about, sustainability of debt. So certainly last Tuesday and Wednesday, coming out of Memorial Day, we saw that big bear steepening. And of course, you start to get those questions again. And it came on the tail of, I use the word tail. It came on the tail of those 3 auctions, those 257s, which all had tails, all went relatively poorly. So I think it lent itself to that kind of debt sustainability type of narrative. But I'm a bit of a fader of that. I know it's a very popular topic. It pulls a lot of attention. It's great for headlines to kind of go out there and bang on about debt sustainability. But that's a very long-term issue. And when you ask about how much positioning is out there, I think for sure there are people who lean short rates, tend towards steepeners because they do have a view on full faith and credit or view on debt sustainability. But I just think that's a very hard thing to position for. I think we're in a very choppy environment. We have, we're kind of on this precipice of trying to figure out what the Fed's going to do.
I agree. Yeah.
For the rest of the year, it's tough to play a 10-year thesis on debt.
We're on the precipice here, Paul. I was remiss. I didn't mention the Sweeney number. We are near 5% in the 2-year. We've come in a quarter of a percentage point. 4.74%. That's on the edge of ginormous.
That is. So, Blake, when you walk out onto the RBC trading floor, what are your traders telling you? What are where are the flows going? Are people buying here? Are they selling here? How are they getting positioned?
I think if you kind of compare to where we were coming into this year, obviously we were pricing in a lot of cuts. I think, if you want to put a scale of 1 to 10, I think if you talk to a lot of real money investors, I'd say probably 7, 8. On that scale as far as longs go. Steepeners were still, the most popular trade. I think that positioning has lightened up quite a bit. I think, over the last few months, I think people have gotten a lot closer to neutral. And, I think what we were talking about before about the ranges, I think people are kind of waiting, trying to wait and see what's happening here. I think, in our conversations over the last month, I would say the one theme that keeps popping out is not a directional long or short view or a steepener or flattener view per se. It's not a 3-month thematic type of view. It's really tactical. I mean, people are looking for carry. They were trying to find trades where I think people were kind of resigned to this range to kind of not really knowing what the Fed was going to do for several months as they did lose confidence in inflation and inflation outlook. So they're just trying to find ways to make some money without having that big curve move or the big duration move.
Blake, thank you. Blake Gwynn, RBC Capital Markets with us here into the Jobs Day. We'll have that in less than an hour for you. A gentleman I've talked to many, many times. He did great work on Duke. He wrote a book about the Duke lacrosse scandal and all that. Really fair treatment of it. William D. Cohen in the New York Times this morning, channeling Paul Sweeney. I love how he starts it. 60 Minutes, MTV, The Daily Show. It was a cultural icon, Paramount.
Yep.
And it is just simply this, Paul, you've been so good on this, a slow death of a fabled media empire. William D. Cohen in the New York Times.
Yeah, I mean, we call it Paramount. Global is the name of the company now, but it's the old CBS television network. It is Viacom and all the cable networks that Viacom owned back in the day. And then, of course, the Paramount movie studio and television studio. So some of the 3 of the biggest brands in all of media now combined under one ownership. Sherry Redstone and Sumner Redstone's daughter, the control shareholder, supposedly looking to sell this company, but there really aren't any bidders. And we've been looking at this thing for almost a year now, and there's been no credible bidders in my mind. That if I were a banker, I don't think I see any credible bidders out there. I don't see any capital markets support for any of the real bidders. So we're kind of floundering here.
Did you ever meet Sumner Redstone?
Many times.
The picture that Mr. Cohen paints. He says at one meeting he's like got a temper like Michael Barr.
Yeah, he was a force of nature, and I mean it's a.
Did you ever see him lose it?
Absolutely. I've seen him. I hundreds of times I met with him and had meals with him and all those types of things. He was one of those media moguls where he commanded, Hollywood. And Rupert Murdoch, another one, you could put right into that range as well. But those days appear to be over. It's become much more of a corporate type of environment out in Hollywood. But again, Sumner Redstone and his family still control, and Sherry Redstone, his daughter, still have control stock. And it's a question of what does she want to do? And she's indicated she wanted to sell. Unfortunately, in hindsight, she's 4 or 5 years too late in selling this company.
What's amazing is, the temper that you talk about, where the Cohen article is just immense.
Yeah, it's great.
It's like when the Tigers lost to the Royals a few years back, like 22-6 or 26-2.
There were a lot of Stros that were down.
There was a 21 run, 26-5 was the score. Royals over the Tigers. Barr just lost it.
Yeah.
I mean, they had to medicate him. With our news in New York City, this Jobs Day, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden just met with Ukrainian President Volodymyr Zelensky in Paris as Kyiv prepares for what officials say could be a tough summer ahead against a Russian offensive. Biden and Zelensky attended the 80th anniversary events of D-Day in Normandy yesterday. Meanwhile, President Biden says he was forced into this week's executive order on the border after former President Trump convinced congressional Republicans not to back a bipartisan deal on immigration. Biden spoke to ABC.
Everybody knows what's happened. We had a deal. It was much broader than this, much better, much more accepted across the board. And he got on the phone and told the Republicans, don't support it. It will hurt me, it will help Biden.
Meanwhile, former President Trump was on the campaign trail in Phoenix, Arizona, a crucial state he lost in 2020, but one he hopes to take in November.
We need a victory that's too big to rig. You know what that means? We need everybody to get out and vote.
Trump pushed his campaign slogan last night again, we have to make America great again. Today, the defense could get its turn at the gun trial of Hunter Biden. Yesterday, jurors heard from the prosecution's so-called star witness, Hallie Biden, who was married to Biden's late brother, Beau. Parts of the west and southwest U.S. are bracing for another day of brutal temperatures. A massive heat dome has temperatures in the region soaring into the triple digits, and that includes Las Vegas. Finally, after 41 seasons as host of Wheel of Fortune,
final spin for it.
Host Pat Sajak signs off tonight. His farewell episode on the beloved game show said to be a tearjerker. Co-host and letter turner Vanna White says she got choked up when she had to say so long to her friend.
You're like a brother to me, and I consider you a true lifelong friend who I will always adore. I love you, Pat.
Wow. White will stay on in her role and will be joined by Ryan Seacrest in the fall. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Wheel of Fortune. I'd like it would be like, see, if I got on there, I'd be like out in one turn.
That show, here's Game
It's
Show
so
Geek
simple.
coming here. A show started in 1975 with Chuck Woolery.
Yep.
And it was on, and then you had the nighttime version with Woolery, and then Woolery got replaced with Pat Sajak, and Pat Sajak has been there with the nighttime version ever since.
And this is your expertise on game shows, right? I mean, this is the experience of the Michael Barr House. Were you ever on Wheel of Fortune?
No, but I was on another game show.
Which one was that?
That was Alex Trebek's Classic Concentration.
Really?
You were on with you met Alex Trebek.
Oh man, yeah, he was giving me cars. He was giving me the kitchens and stuff like
Man,
that.
the 6,000
Yeah.
square feet you've got just west of the horse farms in New Jersey, that came from concentration.
That was
right?
in 1989. I won over $33,000 in merchandise.
Player.
No kidding.
I tell you, in radio, folks, the stories these radio people have,
It's just
it
amazing.
never,
It's
ever
like,
stops.
It's like, look,
Yeah.
I need to get a life.
That was also the days I had a Jerry curl, which I don't want y'all to see.
Thank you, Michael Barr, and thank you again for yesterday's huge news flow. It's Jobs Day. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Traders kind of in this wait-and-see approach with key job set out in less than an hour from now. So far, futures little change. We'll take a look at the bond market. We have the 2-year yield 4.74%, up 2 basis points. The 10-year yield 4.30%, and that's up 1 basis point. We'll head over to commodities. Well, oil prices headed for their third straight gain. We have Brent crude $80 a barrel, WTI crude $76 a barrel. Looking at spot gold, it's lower at $2,334 an ounce. Over to currencies, we have the dollar is weaker, Japanese yen stronger, euro, British pound stronger. We have Bitcoin up 1%, 71,550. Clothing retailer Express, some news there. It's moving forward with a $160 million sale of its business group, and that includes its mall landlords. And we were talking earlier with Morgan Stanley's Ellen Zettner about fishing, so I thought this was interesting. Tuna fishing, suddenly the hottest thing to do in the Hamptons. Wall Street workers, they're coming home with full coolers because of faster boats and also those big game fish. They're coming closer to shore. There you go. That is your Bloomberg Business Flash. Tom and Paul.
So are they in boats, or are they doing the thing off the shore with the rods in front of their 18?
They're doing the boats, but they're faster, so it gets them to where they want, so they can get the fish faster. And then the fish are closer to the shore.
Sounds
so
like a woman who knows what she's talking about.
Yeah, I know.
They're pulling in big fish, those Wall Street workers.
Okay. It's Jobs Day. Paul Sweeney and Tom Keene. I'm looking at the data here, ECO Go. I don't know where to begin, Paul. I'm going to go to the unemployment rate. If you said 3.9% unemployment rate 2 years ago, 7 years ago, 12 years ago, it'd be nirvana.
Right.
Price to perfection.
Yeah,
I mean, it's like a boom economy.
And we've been at this level or even lower for, a very long period of time here. So, the labor market has been, I guess the economists call it fully employed.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Got to get through the newspapers, folks, because Paul's completely bent out of shape about the song we're going to end with, so we got to explain that. Your daily look at the front pages with Lisa Mateo, brought to you by Interactive Brokers. Interactive Brokers, they charge dollar. Margin loan rates from 5.83% to 6.83% rates. Subject to change. Learn more at ibkr.com/compare. Lisa, what do you have on a Friday?
Well, we got the Associated Press. They're saying the number of zombie companies on the rise. We're talking about companies, so much debt, they're struggling to survive, barely able to pay even the interest rates on their loans. So here are the numbers, Associated Press analysis. The numbers soared nearly 7,000 publicly traded companies around the world, 2,000 in the U.S. alone. And that includes like companies that run Carnival Cruise Lines, JetBlue, Wayfair, Peloton. So these are big companies.
Yeah.
And the AP is saying a lot of them won't survive because the dates are approaching when they have to start paying those loans. And they might
2 years ago, Paul, my theme for the year was the great zombie roll-up.
Yep.
Maybe I was early, but here it is.
Yeah, you've got companies that have higher levels of debt, and they have them at low rates. Now they got to refinance these things, and the rates are so much higher here. It really calls into question their ability to pay interest, to pay the principal, and all those types of things. So it's not unusual in this part of the cycle, but here we are.
And if they go bankrupt, that's even worse because they have all these workers, and that becomes
but the
a bigger
debt's here.
issue,
It's like the commercial real estate, the office buildings, Class B, Class C.
Yeah.
You extend and pretend, and you wait until you can. I mean, I wonder over the weekend, what will we see nationwide in foreclosures and the other things?
But a company like
real estate.
Carnival Cruise Lines, they will earn their way out of it. Like the market doesn't have any concern about a company like that who's got growing.
Have you ever done that? Like the 15-story tall cruise. I was in Venice once, and one of those boats went right by, just like in the movies.
Massive.
It was like, to me, it was rude, but there they are.
They're huge. Massive.
Next.
Great business.
You were just talking about this, the NBA and the broadcast rights and all that. So this is kind of a sidebar. You had the NBA commissioner, Adam Silver. He said the league is going to turn to expansion, probably go overseas, beyond the Toronto Raptors, go beyond.
Right.
After this whole TV deal thing works out. He said he's thinking long-term. Mexico City actually considered a contender for a new NBA franchise. But you'll have a lot of people who are interested in owning teams. If LeBron James retires, LeBron James could be a part of it. Shaquille O'Neal says he's expressed interest in ownership of teams.
I mean, what's interesting here, Paul, and let's go to row 4 at the Knicks game where Paul Sweeney holds court. And the answer is, will it dilute the game? I mean, are there enough players out there to do NBA expansion?
There are plenty of players, particularly internationally, Tom. So many players in the NBA come from Europe in particular. I mean, they could start a league. The NBA could start a league in Europe tomorrow. That's how global the basketball league is. Basketball
so you mean
so much more global than even American football.
A separate league, or London plays New York Knicks?
I don't know. I mean, I think the logistics there would be very difficult. But I'm just saying that the basketball as a sport is a global sport, more so than, say, American football. Yeah. American football, you bring that over to London, they've been doing it for years.
I've been in a bar.
It's fine. I mean, it's fine. I mean, people like it, but they don't. But in Europe, Spain, all over, it's a global business.
I've done the NFL just outside the Tower of London in a bar selling to Americans, and it's just not. I mean, it's foreign. Yep. That's all there is to it.
Yep.
What else do you have today?
So the New York Times talking about concerts and if they're starting to die out. You had Jennifer Lopez, she canceled her concert. 2023, it was a good year, right? You had Taylor Swift, you had Beyonce, Drake, Bruce Springsteen, he was 2023. But there have been cancellations. Some sales are slowing. You had Coachella, those tickets normally sell out, but there were still some available when it opened. So they're saying that the market for concert tours could be slowing, but other people are saying, you know what, it's good. Live Nation is saying so far sales are up from the same point.
Well, what do you think? I mean, when you go to see Bruce, what's the night cost you?
Oh, it's
car.
It's
dinner.
Merch. It's crazy, but it's a once in every 2 or 3, 4, 5 year type thing. So you just blow it off. But I think the issue for concerts, Tom, was that was one of those businesses coming out of the pandemic when we switched from just buying goods like Peloton bikes to experiences. And one of the big experiences was going back to concerts. And that we've had 22, 23 were just blowout years.
What I learned on this week is Liz Ann Saunders is never going to see Taylor Swift.
No.
She, maybe she'll see Black Keys or something with an edge to it. But the major thing we learned on Surveillance is Liz Ann Saunders is not going to be in Paris with Stephanie Ruhle and Mohammed
Stephanie Ruhle was there. She had a whole big
watching Taylor. Yep. I think Lisa was there. She just won't admit it. What else do you have this morning?
This is for Tom.
Sleepaway camps. Okay, this is what we're talking about. Not sure if you ever send your kids over to summer sleepaway camp, but moms and dads are dishing out even more money. They're hiring people to pack for them, to pack their kids. So the sleepaway camp itself is like 15 grand.
Out of control. Fortunately, Paul has to talk about a song to save me. This is a total American scam.
Yep.
In America, you basically pack up the bedroom and move itty bitty to camp. It's just ridiculous.
Yeah, Damien was talking about this just the
I'm
other
honored
day.
to say that Afterthought will be going to a camp in Scotland.
Wow.
And basically the page is they may bring one knapsack and one suitcase.
That's it.
That's it. That's my kind of camp.
Oh, see, the problem is these camps now, they have like 100-item lists.
The packing lists are just unbelievable.
Unbelievable.
So they're hiring these organizers for like $125 an hour to get them there and also to pack them when they come back. So that way the kids have their stuff packed, their laundry's done, they come home, mom just opens up the case, and that's it. They can spend more time with the kids.
Lisa Mateo with the newspapers on a Friday. We now turn to the angst that's out there. Springsteen did The River, which I think I had 3 copies of. And they had an album, and his wonderful manager, John Landau, said, there's no hit. And so this genius, one night in a hotel room, wrote a song that was a ginormous hit.
Yep.
And it was un-American because it had synthesizers. You've never recovered from the synthesizers in Dancing in the Street.
Dancing in the Dark. I mean,
Dancing in the Dark, excuse me.
I'm a huge Bruce fan, so I'll never say I dislike a song. I'll just say it's my least favorite song of Bruce. But he, as you mentioned, Tom, he set out to write a number one song. He'd never had a number one song. He wanted to have a number one song. So he wrote what he thought the radio industry really wanted, a pop type of song. So I've heard Steve Van Zandt say, don't do it, don't do it, don't do it, don't put it on the radio, don't put it on the album, don't put it on the album. He put it on the album.
Why
and it
don't
was
you
a big
bring,
hit.
Paul, please, bring in this song.
Dancing in the Dark, our good friend Bruce Springsteen from South Jersey.
I go to bed feeling the same way. I ain't nothing but tired. Man, I'm just tired and bored with my Hey there, baby, I could use just a little help. You can't start a fire. You can't start a fire without a spark. This gun's for hire. Even if we're just dancing in the dark.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. In 30 minutes, a hugely anticipated labor report, the two reports for the United States of America. I know President Biden will be watching from France. He'll be briefed there as he celebrates the remembrance of the 80th year of the D-Day invasion. He met with Mr. Zelensky here within the last 2 hours. I'll say a busy day for the president across France, including that horrific Rangers wall that is at Normandy, where so many Americans sacrificed. For all of us, we don't have a space launch today, but we do have it's Hello Kitty. It's going to be on YouTube. And Paul, previous $46, and now we've gone from 65 to 40 since Lisa wrote the newspaper report.
I know, exactly. So stock down about 14%, 13% in pre-market trading on that news that they're filed 75 million shares for sale.
I don't know what to make. I don't have anything intelligent to say. I'm just not going to get there.
That's the best, probably.
Bloomberg Surveillance this morning. We're brought to you by Cohn Resnick Advisory. Assurance Tax. Cohn Resnick, they can help you improve business resilience through a comprehensive risk management solution. Visit CohnResnick.com. On Jobs Day, we spell it CohnReznick, Cohn Resnick. Paul, do you have a guess? Once I got the payroll thing almost right.
Yeah.
So since then, I've never guessed it.
No.
But today, Zentner's higher.
I know.
Morgan Stanley.
Yeah. You always got to pay attention.
Whisper's like a 160.
Right, exactly.
I'm lost. I don't know where to go.
I don't know where it's going to go, but it's going to be. We'll find out at 8:30 Wall Street time.
Is McKee with us today, or is
I don't know.
he the Red Sox won 14-2. He may have
it's a Friday in the summer. You never know where he is.
Maybe we'll have Mike McKee with us as well. A little green on the screen. I'm going to call it fractional here. Futures up 3. With our Bloomberg Business Update, here's Lisa Mateo.
You got it. And the countdown has begun. We're about 30 minutes away from Jobs Day. Traders kind of waiting on the fence. We have futures still little change. That report expected to show employers boosted payrolls by 180,000 last month, slightly more than April, with the unemployment rate seen holding steady. We'll take you over to the bond market. We have the 2-year yield 4.74%. That's up 1 basis point. The yield on the 10-year 4.29%, and that's up 1 basis point as well. Moving the markets, yes, GameStop shares really taking a dive. They reached more than 30% in the pre-market. Right now, we have it down about 13%. First quarter results showed net sales declined in the first quarter. Then the company announced it's going to sell up to 75 million additional shares, coming just hours ahead of Roaring Kitty's anticipated return to YouTube. We'll take you to Taiwan Semiconductor Manufacturing. They produce the semiconductors for NVIDIA, Apple. ADR is up about 0.5%. May sales rose 30%. That was thanks to strong demand for AI, also a recovery in some consumer electronics. And finally, Lyft kicked off its first investor day yesterday, said it's expecting a 15% growth in bookings over the next 3 years. Their shares are up about 3%. That is your Bloomberg Business Flash. Tom and Paul.
Let's do this right here quickly. We've got a wonderful guest, Katie Kaminsky, to get us going. I don't understand how the drivers make money on Lyft. All the drivers I talk to say they're not making nearly what they made a year ago.
It's that take rate, and I don't know how much the Lyfts and the Ubers are allocating.
I don't get it.
It's a tough business. That's why it's always I always think of it as a second gig. I don't know many drivers where that's their primary gig, and that goes to the whole question of, are they employees or are they contractors?
Yeah, without exception, everyone and they bring it up. I don't bring it up. They're making less than they made 12 months ago. That's what they say. She's making more than she made 12 months ago. Catherine Kaminsky joins us right now. Katie Kaminsky, Chief Research Strategist, Alpha Simplex, here. Katie, just simply, is there a bull market trend in place?
Gosh, that's a great question for today. This week has been rough. I'm a little concerned. I mean, the signals are still there, positive for equities, but this week really made me pause, thinking that some of the themes have changed significantly.
Okay, in what way? Come on. You got to give us some details. Why? Rich,
I've been coming
Rich from Madison Square Garden emails in and says, why?
Yes. So what's really interesting this week is we saw massive synchronous moves cross asset. Look at what happened to yields. I mean, they just plummeted over the last week. You've also seen commodity markets really spooked me the most, I think. We saw a massive reversal in commodity trends, which had been very higher for longer, pro-inflationary. And the dollar has also struggled. So it's been a very risk-off week in some sense. So we had a really different moves than we've seen earlier this year, which makes me nervous.
And what's so important here, Paul, with Katie Kaminsky at Alpha Simplex, it's the work of Andrew Lowe at MIT, and it's all trend-based. and it's all within it and within the range, and that goes to where the range is on fixed income as well.
Yep, absolutely. I mean, I look at Katie's CV. There's a lot of MIT there, Tom, and that makes me very nervous because they're good at the math thing, and I told her it wouldn't be math here. So, Katie, for someone simple like me here, if I get a jobs number that's in line with kind of where the consensus is, what's the Fed going to do with that kind of number? Is that going to give them some more confidence to just sit on the sidelines, maybe?
Well, it's just another data point. But I mean, I think if we have a consistent number, it's really about the whole picture. And if you look at the data more recently, it started to trend weaker. And why I said this week really made me nervous is for the first time, the market seems to be reacting to that. So we're seeing this sort of bad news could actually mean something bad instead of it being really a rate cut story only. And that's where I get a little nervous.
Do you feel like, I mean, there are a lot of folks out there, Katie, that feel like this Fed is already behind the curve in terms of lowering rates here, that the data actually suggests that they should be cutting now. They should have been cutting maybe a couple of months ago. How do you think about that?
I mean, this is a good point. Look at this week. We had already 2 central banks cutting this week, the ECB, the Bank of Canada. It's very rare that the U.S. is behind the curve, and usually it takes the lead and others follow. But you're definitely seeing, if we start to see weak data and we see some demand destruction, so this potential that, we can't withhold this level of demand, that's going to make me concerned that we're going to see a pivot. And we're going to pivot to rate cuts, but will they be early enough, and will they be enough?
Are you making a bet on yield within a range, or are we at, on yield, we're at support where you need to reestablish a bet if we break through support to higher price and lower yield?
This is a good point. We are hitting some reversal in the fixed income signals. I mean, you probably remember I've been pretty much a stickler on higher for longer most of this year, and you've seen short fixed income positioning.
Yeah.
And this week is kind of an indication that we're starting to pivot and hit some of those levels where you're seeing signals in fixed income shifting more towards long eventually.
Right.
It's obviously going to take time, but there is a sense of a pivot. Whether it's a head fake or an actual directional change is still unclear.
Can we go Matthew, Paul?
Yeah, absolutely.
Okay, we're going to go Matthew on a Friday with Katie Kaminsky. Katie, within the analysis here, the equation, on the right side is a Greek letter epsilon, folks. It's a cutesy pie E. What's the systemic risk out there right now? How big is the epsilon, the unknown, as, say, someone like L-Arian would say?
I would say within the last week, the risk that I perceived has increased in the sense that we saw very consistent themes in the markets. But as you start to see synchronous moves like we saw this week, that often is an indication that there's some risk that's perhaps not priced at this point. So I think what worried me is more this demand story. Is there some level of demand destruction? Weaker economy also means weaker demand. At what point does that actually suggest that we could have a harder landing than we thought? Because we have nodded off that. We've kind of let it go a little bit, but that came back into picture for me.
On the markets, Katie Kaminsky, thank you so much. Alpha Simplex this morning up in Cambridge in Boston.
PhD in operations research from MIT. If I walk up to Katie like at a Starbucks, I got nothing to say to her.
No, she's at a bar. She's reading. You see her at a bar. She's reading, something out of Imperial College with like six integrals in it.
I don't know about these people.
They're in the XYZ space. Futures up to its jobs day in 20 minutes with the VIX 12.71. With our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. President Joe Biden publicly apologized to Ukraine's leader today, while in France, it's over the 6-month wait for funding for weapons blamed on a paralyzed U.S. Congress. But Biden says it ultimately allowed battlefield gains for Russia. President Biden told Ukrainian President Volodymyr Zelensky he was sorry that his war-torn country got caught up in American politics, pledging to stand by the Ukrainian people.
The United States is standing with you. You are the bulwark against the aggression that's taking place. We have an obligation to be there. And so I'm looking forward to having a detailed discussion with you about where we go from here.
The funding also covers munitions. Former Trump White House aide Steve Bannon has been ordered to turn himself in to a federal prison starting July 1st. Bannon refused to comply with the subpoena issued by the House January 6th committee. The former White House aide was convicted of contempt of Congress and sentenced to 4 months in prison. Outside the courthouse, Bannon said this will not stop him from speaking out about what he says is an unfair Justice Department.
There's not a prison built or a jail built that will ever shut me up.
The judge who presided over Bannon's case said he could stay out while his appeal was pending, but it was rejected last month by a 3-judge appellate panel. Prime Minister Netanyahu accepted an invitation to address both houses of Congress next month in Washington. Bloomberg's Steve Potisk is in the nation's capital.
House Speaker Mike Johnson's office announced that Netanyahu will address a joint meeting of the House and Senate on July 24th. Netanyahu is facing intense criticism over the civilian death toll in the war in Gaza, which has caused divisions among lawmakers and led to public disagreements with President Joe Biden. Some Democrats, including Vermont Senator Bernie Sanders and former Speaker Nancy Pelosi, have said they would boycott the address. This would be Netanyahu's 4th speech to a joint meeting of Congress. That would make him the first foreign leader to do so that many times. In Washington, Steve Potisk, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom Paul Lisa.
Michael Barr, thanks so much. On YouTube and YouTube live chat, please stay there. Give us your thoughts on the jobs report. Subscribe to Bloomberg Podcast. Search Bloomberg Podcast. Good morning in your commute. On Apple CarPlay. Paul, there it is, ECO Go. I'm looking at the 2-month payroll net revision. Last time around, it was 22,000 light.
Yep.
Anna Wong says maybe now, but even in the coming months of this report, we're going to see some big revisions.
All right. Well, that's I definitely pay attention to what Anna Wong is saying. I'm just looking at the numbers here on the Eco Go here consensus. Change in non-farm payrolls, Tom, 180,000 is a consensus.
That's a big number.
For this period. It seems like so. I also look at the average hourly earnings here, looking for an increase of 0.3% month to month, and you annualize that. That's about 3.9% wage growth. That's solid. It's less than what it had been. So if you're looking for some moderating wage inflation, maybe you're starting to see that a little bit there. But that would be flat, kind of month to month.
Wholesale trade sales come out at 10 o'clock. You and Alex are going to have that. And,
yeah, hopefully Alex has something to add there.
You know, Bitcoin 71,000. I look at wholesale trade sales, and that reminds me of the fruit in the yogurt that Lisa has for breakfast in the morning.
Now, there's Fruit Loops upstairs. I was going to get her a bowl of Fruit Loops and put it on her desk, but then I thought the better of it.
There you go.
That probably would not have been well received by
They do
Lisa.
have blueberry scones, though, downstairs, which I did enjoy.
Really?
There's a downstairs?
LL2, that's where they have the good stuff,
sorry,
right?
upstairs.
Oh, upstairs at number 6, okay.
I'm all over the place.
Okay.
Blueberry scones. Have you ever known this, Michael?
No, because
Barr?
Nobody wants fried catfish in the morning, do they?
No, I don't think.
There you are with the thank you, Ellen Zentner, for the catfish update. Jobs Day soon. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are 50 minutes away from key jobs data. Could lock in some bets on interest rate cuts by the Fed in the coming months. It follows policy easing from the ECB, also Bank of Canada, JP Morgan Chase and Citigroup. They're still predicting that the Fed will ease next month. Over to the bond market, the 2-year yield 4.74%. That's up a basis point. The yield on the 10-year 4.29%, and that's up 1 basis point. Few companies making news. We'll start with Tesla. They're down about 0.2%. An investor sued to challenge that proxy vote over whether the company should move its corporate home to Texas. Also reapprove a $56 billion pay package for Elon Musk. Then we go to Samsung Electronics. Its largest union will actually went on strike for the first time over pay. They plan to resume normal work hours next week. An executive departure over at Stellantis. Their shares are lower. The former U.S. head of Jeep, Ram Brands, Jim Morrison, he has left the company. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. A little green on the screen. NASDAQ up 0.2%. This is a joy, usually by phone to the left coast, way too early in her morning, and in studio now with us is Julia Pollack, who is the most twisted, interesting economist we talked to. She's with ZipRecruiter. I don't think they're a Wall Street firm. Would we say that, Paul?
No.
ZipRecruiter is like digital, hip.
Yeah.
You know, it's like cool. You got to be cool to work there.
Yep.
And what she brings is prodigious academics. She's got parchment. She survived. Who'd you have Ec 10 at Harvard?
Greg Mankiw, of course.
You survived Mankiw at Harvard.
I did, and Ken Rogoff and Marty Feldstein.
Did Ken ever throw chalk at you?
Ken is a sweetheart. I don't think he's ever thrown chalk at anyone in his life.
Is this job economy anything Martin Feldstein taught you? To me, off the pandemic and with the technological advancement that ZipRecruiter owns, this is not Martin Feldstein's job economy, is it?
No, but I think the lessons about public finance and fiscal responsibility probably are timeless, so he would probably point us in that direction.
Yeah, I think he would, absolutely. What do you see here in 10 minutes? It's always twisted and different from what we get from Wall Street.
So last time I happened to be right on the money, and so I'm worried this time that I could mess up, but I'm actually expecting this report to be hotter than expected. All the focus this week has been on a swath of terrible economic data, but it's not really so bad. The big dip that we saw in GDP now, that reversed yesterday. The ISM services number was very hot. Mm-hmm. So we're seeing good data. And then in our marketplace, which has been a better predictor of the jobs market than anything else I've seen lately, job postings are firm.
Well, that's kind of when I think of ZipRecruiter, I think of the young folks. I'm not a ZipRecruiter guy if I'm looking for a job. I'm going to probably make a resume and walk around and hand it out to people like I did back in the day.
Fax it.
Exactly, thank you. But that's not how the kids do it today. College graduates, for example, how's that market look for folks just kind of coming into the workforce?
So a lot of the headlines are very gloomy, but if you look at what's actually happened this year, youth employment rates have been going up and up and up, and we could actually get the highest May rate ever. I mean, participation across the board has been pretty strong. Prime age participation has sort of stalled. That was growing rapidly, and now it's flattened this year. But young people are participating at very high rates.
And we've also been, I guess, over the last 5-6 months, there's been more discussion about the illegal immigration and how that's impacting just the labor market in general. What's your data show?
So immigration across the board, visa immigration, legal immigration, they all seem to be very high and having a meaningful impact on the number of applications per posting across the board. Right? Skilled immigration is high. So we have seen applications for most kinds of jobs go up 10, 20, 30%. So it's more competitive out there. If you're looking for a job now, faxing it is not going to work.
Not going to work.
9 minutes from the jobs report. 9 minutes from the jobs report today, folks. Good morning, Paul Sweeney and Tom Keene. We take you beneath the headline data with us. Julia Pollack now, Ira Jersey to be with us with a huge bond reaction. And Paul, just to frame it out, I'm hearing some enthusiasm from Julie Pollack and Ellen Zentner that I'm not seeing in a 180 statistic or the whisper of 166.
Yeah, exactly. How about if I'm I'm an employer here? I'm looking to find talent, and we heard for the longest time, during the pandemic, coming out of the pandemic, it's been as challenging as it's ever been. Is it lightening up at all? I mean, I look at the JOLTS number, still high relative to historic levels, but coming down, I guess.
Yeah, so labor availability and quality are improving. Employers have some better opportunities out there now. And they're facing a challenge on the other side. So between 2024 and 2027, we're going to see peak retirements. Instead of 10,000 people retiring a day, we're going to see like 11,200 retirements a day. And
Wait, give me that number again.
11,200 a day.
Wow.
So
all right, Tom
companies
and I will not be one of those. I'll just
Can
tell you right
now. Can I ask you a question, ZipRecruiter?
Yes.
Paul's got his resume out. I mean, we have our resumes are in storage.
Sure.
Liquid nitrogen. Do resumes matter anymore? What does ZipRecruiter say?
So there are some employers who are, crusty old employers who like to see resumes and cover letters. But the way it works these days in many, many industries is that you just create an online profile. You answer a couple of questions, it populates your profile beautifully, and then you can apply to most jobs with one click.
What I hear from kids, flat out, it's who you know. That's what I hear uniformly from the 20 to 35 crew.
I don't think
You
that's
don't
the
agree?
case at all. Absolutely
Yeah.
not. I mean, I got my job cold at ZipRecruiter, applying on ZipRecruiter.
Excuse me, Harvard, Party Rand.
Yeah.
You go to the top of the pile. Tell us about Party Rand. I literally studied for the CFA in the Frederick Pardee Boston University Library. But he worked at Rand, which is the research combine. And Party Rand, he single-handedly built. It's so hard, Paul. You have to go to graduate school in Santa Monica. It's so hard.
You get surf breaks between classes. It's perfect. And it's a very practical program, right? This is a rare program in which you have to work while you study. And that is what so many people are missing today. The data is really clear. If you get an internship, if you get an apprenticeship, you're much, much, much more likely to get a good, high-paying job. You get a job faster. Like 60% of people who have previous experience, among those young first-time job seekers, you get a job within a month. Only 30% if they don't have.
Are the teens getting jobs this summer? I mean, when Paul and you and I always had jobs.
Always.
My mother wanted me out there at
Since
13.
15.
I had a paper route.
Yeah.
I mean, can you imagine me on a paper route, bow ties, on a bicycle? Are teens getting jobs, or have they been taken over by immigrants?
Well, so the teen employment rate went down for decades in a row as more and more teens stayed in school and went to college, but it's been picking up. And we could actually see the highest teen employment rate in today's report since the Great Recession.
Really?
The highest May rate, sorry.
So is this a fully employed economy? I hear that term. I'm not sure what it means. I mean, we got 3.9% unemployment. Is that kind of fully employed?
Pretty much. Almost everyone who wants to find a job can find one, but it's not that way across the entire economy, right? In healthcare, we see insatiable demand for workers. Hiring is much higher than it was before the pandemic. That industry has added 760,000 jobs in just 1 year, about 3 times as many as before the pandemic.
Right.
In tech and white-collar fields, it's a little slow.
Quick on the economy, Dale Jorgensen at your Harvard, is there a true productivity lift going on right now in America?
That is a huge debate. I mean, the productivity data that came out this week was
A little soggy. Yeah. Jason Furman said,
mixed. I mean, the unit cost data, though, the implications for labor unit costs were great. They've risen only 0.9% over the year. That points to slowing wage growth and good inflation numbers.
Julie, don't be a stranger. Come in every jobs day, fly in.
Yeah, exactly.
Julie Pollack, thank you so much. ZipRecruiter, and I really can't say enough about her effort in Santa Monica with Party Rand, is called. It's a really unique graduate program out in the ferment of LA education. Right now, we ferment over to the fixed income market. Ira Jersey's with us, and it's incredibly well timed on this jobs day. Futures up 2, the VIX 12.7 as we are 4 minutes away from the jobs report. Ira Jersey, if we get an on-target number or the whisper number south, are we going to see price up and yield down?
I do think so. I think that's the direction of the market. You've tended to see recently, as numbers come in, kind of on the weaker to as expected side, which is generally a little bit weaker. You've seen the market continue trends that have occurred the week or so before these data. So yeah, I think the path of least resistance is for slightly lower yields. I think for the 10-year, though, it'll be really hard to break much below 4%, even if we have a really weak number.
So, Ira, we have seen the 10-year Treasury, and the 2-year as well, just kind of yields coming in over the last week or so. What are you hearing from your clients these days about that?
Yeah, people aren't taking big conviction trades right now. Earlier in the year, a lot of people were in yield curve steepeners, thinking the economy was going to slow. We were going to get, 5 or 6 rate cuts, and that would uninvert the yield curve. But now people have been burned by that trade once or twice, and they're not willing to necessarily take big duration bets. I've been talking to some clients this week that are a little bit concerned that the markets, risk markets in particular, are a little frothy, so they don't want to get underweight duration at this point. So a lot of people have covered and are much positioning is, I think, much cleaner now, which of course means that if you do get a significant miss or beat on some of these data coming out the next week, you could actually get pretty big moves as people actually enter new positions.
So what is I know you don't do trades, but Ira, what is the thing within full faith and credit, the metric, the spread that you will monitor at 831?
So I'm not going to look so much at the curve, but at outright moves. So where does the 2-year yield move to? And then we look at the obviously a lot of the derivatives markets. Do we price in or price out some 2025 cuts? Keep in mind, we keep on talking about this year and whether or not the Fed's going to move and when they're going to start moving. But the important thing for most of the Treasury market is really what is the terminal rate? So once the Fed starts to cut interest rates, where are they going to go to? And now we're only priced for them to cut to about 4%, and that's a significant change from earlier this year, and that's one of the reasons why you have 10-year yields and 5-year yields where they currently are.
Paul, get one more in here before the report.
We had some auctions recently, Ira, and I don't pay attention to those things, but that's why we pay you.
You pay more attention than I do.
Ira, what'd you take away from some of these Treasury auctions? What did they tell your market?
Yeah, the auctions last week were pretty weak. The demand slipped quite a lot. It was actually the worst auction week that I can remember in quite some time. We got 3 auctions, all that tailed. I think part of it was just the timing of when they occurred, right after the Memorial Day weekend. You had 2 auctions on a Tuesday and then one on a Wednesday, and I suspect that some people didn't have their senior traders on the desks to put in competitive bids. So I think that some of it was technical, but also people didn't want to necessarily get in front of a market that seemed to be rallying pretty dramatically.
Ira Jersey, stay with us, and he will give us some wisdom here at 8:30 as we begin to see market reaction to this report. We're 1 minute away from this jobs report. Again, 2 reports synthesized into one. We'll look at the non-farm payrolls out there. Paul, it's a 180 statistic, and you said 166 is a whisper.
Yep, WHIS, get to those whisper
I didn't
numbers
know that.
from the streets.
There's like a code.
Yeah,
Okay.
Tom from the 6th floor's got a function for everything. So again, non-farm payrolls looking for 180,000. Last period was 175,000 here. The unemployment rate looking to hold steady at 3.9%. That's the consensus there. And average hourly earnings up about 0.3% on a month-to-month basis. That'll be a little bit higher than last month.
Good morning. Out on your commute on Apple CarPlay and Android as well, the Bloomberg Business app. It's free. Thank you on YouTube. Love the build out of the audience for these key economic data. On live chat as well, YouTube, you search for Bloomberg Podcasts, subscribe to Bloomberg Podcasts, and worldwide and across this nation. Just good morning to all of you as we stagger to this report. Any good numbers here? We'll see what wage growth looks like. The unemployment rate, 3.9%, and of course the non-farm payrolls. I'm looking at the revisions. Let's take a look right now at what we see. Oh, Ellen Zentner,
yes,
home run. Oh, Julia Pollack, home run. Paul, do you think the markets will move?
I think the markets will move here. Change in non-farm payrolls came in at 272,000. Again, the consensus was 180,000. Last period was 175,000, so well above. The unemployment rate jumps from 3.9% to 4%. Average hourly earnings, the consensus was for a month-to-month gain of 0.3%. That came in at 0.4%.
Came ticked up. In a year over year, I still look at that, not month over month. I've got a 4.1% hourly earnings, and the revision moves from 3.9 to 4%. Some, revisions lower in non-farm payrolls, but they're completely overwhelmed by that.
And Tom,
272% statistic.
We're seeing that in the bond market, Tom. The 2-year Treasury, which was flat before that, is up about 10 basis points. We're at 4.82% on your 2-year Treasury, so a big move there.
We're back to the Sweeney level.
Yeah, the S&P futures, Tom, down about 25 points. It was pretty, or 22 points. It was pretty flat going into.
I think this doesn't the June Do I have to show up for the Fed decides next week?
Exactly. Hey, let's call out our good friend Ben Emmons. He was pretty much spot on this number. So
very good. Congratulations, Ben Emmons. There's some trophy takers out there. We'll get to Ira Jersey here in a moment. Again, I'm watching the 2-year yield, the Sweeney statistic, 4.84%. Ginormous 12 basis point move to a higher yield. We'll see if we get over 490 and back on the worry, if you will, about a 5%. Yield. All of our economic indicators each and every day, and of course, on this important jobs day, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. We are commercial free for you on YouTube and across Apple CarPlay. Good morning to all of you, and the conversation will be intense. Lindsey Piegza, well-timed to be with us here in moments. We do the Commonwealth mention because Ira Jersey needs time to digest the impact on his bond market, and it is a continued impact. 2-year yield out, 12 basis points, heading for 13. Ira Jersey, your thoughts?
Yeah, so obviously, strong report on the face of it. That non-farm payrolls number, obviously, well above what everyone thought. So, importantly, we've moved 10 basis points, 11 basis points in the front end of the curve and all throughout. But if you look at the SOFR futures, so these are what replace LIBOR futures and are really the short-term interest rates that where people play where they think the Fed's going to go. We've actually priced out an entire cut for the cycle just on this payrolls report. So, so when you look at SOFR futures for the end of 2025, up 18, 19 basis points right now, that's suggesting that people are optimistic or more optimistic about the economy. People taking off their economic disaster hedges here a little bit, and not too surprising, just given the strength of this report. And like you said, Tom, I'm focused on a lot on that wage number because wages lead to spending, even more than, quite frankly, the headline jobs number.
So just remind us, Ira, how does the Fed think about the labor market? How important is the labor market to the Fed in their calculus?
Well, it's key to everything, right? Because it is one of the pillars that they have to abide by. So when you take their mandate, it's stable prices and full employment. So it's hard to say that we're not near full employment when you have wages growing like they are and you have so many job gains every month. There is a little bit of a disconnect here, right? Because of the obviously the household survey showed that the unemployment rate ticked up a little bit. I haven't had a chance yet to dig into some of the details of that, but there is this weird disconnect between the survey data, the two different surveys that they do. The establishment survey showing obviously a lot of strength, household survey maybe a little bit less strength.
We have a CPI report June 12th. Is that in the bond market yet, or did we have to wait for this jobs report before we start looking for a June 12 FOMC meeting and June 12 CPI report?
Well, I think we're going to shift to that now. Now that we have this report, I think people will be, searching, thinking about that CPI report and how it might affect the decision that ultimately the Fed makes. Not in June, right? June, the Fed's not going to do anything. But if we, you need now even a weaker than you would have CPI report to start pricing in additional rate cuts. So people who think that and still had calls for a July rate cut, I think they're going to have to revise those at this point. The data is just too strong, right? So at this point, and this has been our feeling, it's going to be hard, I think, for the Fed to cut prior to the election. We're not going to get enough data, enough weak data probably, for them to even cut in September. 2 months of weakish data isn't going to do it when you've had this string of very strong data over the last couple of months.
Ira Jersey, thank you so much to Bloomberg Intelligence. Look out on the terminal really within hours for his and his team interpretation of what we see and they'll look forward to the key CPI report next week. Did you know that one of our interns programmed the guest today, Bennett?
Really?
Bennett programmed
Okay,
the guest
good.
today. The Segui from Ira, Jersey, over to Lindsey Piegza, just with this report, it's like poetry. Joining us now, the one person I wanted to talk to, we're commercial free here through the half hour. Good morning. Huge audience out on YouTube. Good morning to all of you. Lindsey Piegza joins us, who's pushed way against consensus and has said this is a Fed of stability or even rate increase. Lindsey, you look like a genius this morning. Are you going to look like a genius in 30 days for the report come July?
Well, I think so. Even if we did see a hotter than expected print in even the next one or two inflation reports, it's not going to be enough data to convince the Fed, particularly against very clear, tight conditions in the labor market. And the most concerning component of this report for the Fed is going to be that wage component. We continue to see pressure on wages as labor demand outpaces labor supply. And this is not something that's going to be fixed overnight. This is a rebalancing that is going to have to occur over months, a prolonged period. And so when we look to the Fed, who's telling us they need very clear evidence of disinflation, many months of that evidence, that says that while rate cuts may be eventually does appear to increasingly be a 2025 event.
You know, Tom, this Top Live blog continues to be my go-to when you get these big things. And here's something just posted there. The 272,000 payroll gain was bigger than every last one of the 77 estimates in the Bloomberg survey. So there you go. Lindsey, where's this demand for labor coming from? I mean, who's hiring all these people?
Well, I think it's pretty broad-based. There isn't one sector of the economy that's booming. What we're seeing is an overall steady level of expansion across several key categories of the economy. Now, again, I don't want to oversell what we are seeing in the labor market or the broader domestic economy, because we are starting to see somewhat of a rebalancing. Labor market conditions, absolutely, they're still tight, but they are somewhat less tight than what we saw, not just at the start of the year, but over 2022, 2023. So we are starting to see a rebalancing, but the problem is the overall impact or that rebalancing is occurring at a much slower pace than the market or specifically the Fed had anticipated. So again, still positive, but we are starting to see that second derivative decline.
I mean, Paul, you get out the HP12C. Yep. I mean, if you got pigs on, you got to get out the HP12C. And I do the 3-month moving average, which in March was a big number. OMG, April was a lesser number. And now we just got another big number. Lindsey, I'm rocking 250,000-ish over the last 90 days per month. 6 years ago, that's a boom statistic. Are we in a boom labor economy?
Well, I do caution against reading in too much to the headline payrolls number, because we are starting to see somewhat a divergence between the payrolls and the household survey. Payrolls are consistently reaching new highs month after month, but the household survey really has shown somewhat of fatigue, plateauing over the past, I would say, 6 to 8 months. The disconnect, of course, reflecting the fact that we consistently undercount the working age population, particularly now as we see these large flows of immigration coming into the economy, legal and illegal. But also what we're seeing is this shift in the demand or the type of jobs being created in terms of full-time versus part-time. Now, I haven't dug into the details of this report specifically. Last month was almost entirely full-time. But if we go prior to that, 6 to 8 months, that was almost entirely part-time employment, which, as we know, part-time hires typically have more than one gig. And then, of course, you're counted more than once in the payroll report, which could artificially inflate that number. So again, still positive, but I do think there's some underlying signs of the economy starting to cool, that rebalancing, as I mentioned.
So we had 4.1% average hourly earnings year over year. 4.1%, that's well above the 3.9% consensus. Last month was also revised a little bit higher. Wage inflation, is that a thing?
Well, it's certainly a concern, absolutely. And it's a concern not just for the Fed, but wages. Surprisingly strong wage data for the BOE, the ECB, that was also noted as a concern for the pathway going forward. So even as we see some of the supply side components providing ample relief to inflation, as economies reopen, trade lines come back online in the aftermath of COVID, what we're seeing is some of these variables under the purview of global central banks are showing less improvement, as we have allowed, in some ways, inflation to become entrenched in the economy, with central banks sitting on the sidelines and allowing above target inflation for a long period of time.
Lindsey, when you were taking your PhD, you had the unenviable task of studying the terror from Michigan, Claudia Sahm. And of course, Claudia has been forceful that we don't have enough evident data for recession. Clearly, she's been right. She's on with us in a moment, folks. Clearly, Lindsey Piegza has been right that the economy is much better. But how bifurcated is the economy now between the haves and the have-nots?
Well, I would push back. I don't think the storyline is between the rich and the poor, the have and the have-nots. I think the divide is between the asset holders and the non-asset holders. Because what we've seen is while the average American household is still out spending, they are feeling pain from higher prices, higher borrowing costs, the resumption of student debt payments. But there's another category of consumers that have experienced a massive increase in net wealth to the tune of $12 trillion over the past year. And that's possible thanks in part to this massive increase in asset prices via the equity market, via the housing market. So when we paint with a broad brush, the consumer remains resilient, that's very much true, but the level of resiliency is very much divided between the asset holders and the non-asset holders in this economy.
Lindsey, thank you so much. Dr. Piegza with Stifel here, and of course, she's done a yeoman's job of pushing against they're going to cut, just saying everybody calm down and wait for the data. To let you know where we are now, we've got Claudia Sahm coming up in moments. Because of, is it Roaring Kitty? Do I have that right?
I don't know. At least
Jess Menton's going to brief here. Kitty. I was like, why do we need to talk to Jess Menton about Roaring Kitty? And the answer is we've gone from 67 to 36. We're now breaking down to a new low this morning. So we'll get to Jess Menton on Roaring Kitty.
GameStop down 23% pre-market trading time. They had some news that they filed to sell up to 75 million shares to take advantage of this, what had been 160% increase in the stock this year.
Speaking of Hello Kitty, Claudia Sahm joins right now with her cats that she herds on a weekend basis. Claudia Sahm, of course, providing all sorts of important economic analysis, hugely influential right now with New Century Advisors. Claudia, you nailed it. Everybody's saying Claudia Sahm's right, recession, and you're like, wait for the data. Is this enough of an oomph positive jobs report where you're not looking out to the first week of July, but you've got to get out further to get any kind of caution on this economy?
This is good news today. Jobs days have been good news in the past couple of years. We see a resilient labor market. We have had a job-full recovery for the first time in a very long time, and that's good. So, I understand that sometimes markets think good news is bad news and it's bad news for the Fed. Yeah. No, this is good news for the Fed. People have jobs. This is good.
I mean, the Fed, starting with, they look like a genius right now in terms of the parlor game, which I don't care about. But the overlay of that is a sub 2% GDP growth. Is that embedded into your study now, where you're looking at finally real GDP growth actually pulls down?
So I will channel Fed Chair Jay Powell and say we look at the totality of the data. Right, we have to bring all the pieces together. You can't just look at the labor market and say recession or not. I don't lean just on the Sahm rule, and it's my rule, right? So, and it's very important. A couple of pieces. Always look under the hood, right? We need to see the consumer keep going. We need to see the businesses investing. We've largely seen that. It's going to be bumpy, and never take 1 month and run with it. Like, we really have to look 3 months, 6 months. And if you do that story, you've got the moderation. Today is not throwing that off, but it's a good moderation. It's a sustainable path we are on.
Paul, I'm going to go. The 3-month moving average is like 250 on non-farm payrolls.
Solid.
10 years ago, that was a boom economy.
That was a boom economy. It looks like we're fully employed, I guess. Let's look at the wages here, Claudia. We had last month revised up a little bit to 4%. This month it came in at 4.1% on an annualized basis. Is that wage inflation? Are we looking at the wage inflation there?
We have seen no evidence of a wage price spiral through this entire cycle. And if you didn't see it in 2022, there is no story for it right now. Again, we need a resilient economy. We need paychecks out there so people keep spending. The Fed is going to wait. That's just kind of how they roll. So we want to make sure that that patience on the inflation side does not take us all down. And it looks like they got some resilience, and that's good big picture, not just for the Fed and their waiting game.
So, Claudia, how do you think about the immigration, both legal and illegal, and how that impacts some of the data we've been seeing over the last, 6 to 12 months? It seems to be getting a little bit more play out there.
So first, from the lens of the economy, the immigration, the pickup in immigration to this country has been good for the economy. We had widespread labor shortages, and those really, by and large, are taken care of. Wasn't just immigrants. We had women coming back strong. We had other people and marginalized groups coming in, but we needed workers. They weren't displacing workers. They were filling jobs that weren't getting filled. That's good. Of course, bigger picture, there's a conversation to have about how we do that in an orderly way.
Right.
Now, so that's the economy. Just what you asked about with the data, throw one more measurement challenge at the Bureau of Labor Statistics, right? Like, it is just very hard to survey these people. They might show up in household survey, they might not. They might show up in establishment survey.
Right.
So, but we have a lot of things that are making the data hard to read right now.
A threat to society, Paul, is always an economist that pulls out Merriam-Webster. Claudia Sahm, with a blistering essay for Bloomberg Opinion here in recent days. Claudia Sahm, on inflation, what did you learn in your study? I mean, of course, you have to quote University of Michigan statistics. I get it. It's the franchise out there. But Claudia, what is the character of the inflation into this summer?
Right. So the point of the piece was, yes, there is, when we talk about inflation, people are upset about inflation, and economists try and convince them, no, it's getting better. This is more than economics, right? Because we are talking about the same thing, an increase in prices, right? That is an economic phenomenon. But there's a lot more that's getting wrapped up in inflation. And if we're going to have a productive debate, we need to get the economics sorted out, put the economists in that bin, and then there's another discussion and bring in other experts. Like, let's stop pretending this is all about the economy.
So, Claudia, where does this Federal Reserve go from here? It sounds like, and I'm looking at the market here, boy, they can just wait, no problem waiting here, and maybe even into next year.
The Fed has a dual mandate. So regardless of what the Fed, quote unquote, can do, the Fed, when inflation is back down on a sustainable 2%, they're supposed to be out of the way. Their goal is not to lean on, nor is it their mandate to lean on the economy as long as possible. So I think that's, today is a good day in saying, hey, we're not careening towards a recession. That could lead to really fast cuts, very disruptive.
Right.
And yet, I don't think there's anything here that says, oh, the Fed's going to wait until next year.
Okay, Claudia, I got one final question. We need to go to Claudia Sahm territory.
Yep.
Claudia Sahm, you know that the Science Diet CD stress bag for cat food, it's a moonshot. It was $100 for an 18-pound bag, and that puppy's popping $114. I'm seeing the same thing for for vet bill and kennel fee as well. Claudia Sahm, you're seeing inflation in your cat food. Discuss.
Yeah, so I think I'm doing what a lot of Americans are. When things get more expensive, you go switch to a cheaper brand. Puffy, my kitty, she's more than happy to eat dry Purina cat food. It was on sale last week.
There we go, Dr. Sahm. Dr.
Yeah.
Sahm, on the substitution effect. Puffy is Purina cat food. Jess Madden's going to walk out of the studio. Dr. Sahm, thank you so much for joining us, and congratulations. Without question, the most influential academic economist of the recent 12 months. They're forcing me to do this, folks. Roaring Kitty called me up, says, stop calling me Hello Kitty. And I was like, okay, Jess Metten after the jobs report. We're going to do GameStop for a couple minutes. And I'm sorry, there's theater out there, Jess. 67 to 36, down 45% since the last time you were in the studio.
That's right. So giving an update here. So as you know, Bailey Lipschultz on our team, he's his beat is basically the meme stocks. I heard he was supposed to pick up his marriage license today, but
is that right?
But you know what? We put him to work, unfortunately.
Oh, no.
I overheard an editor say, you know what, get him in here now. And sure enough, they didn't even have to really tell him. He already was up.
Yep.
I think he's working from home today because he has
It's
to.
a work from home day.
It's a work from home day. You got to keep the fiance happy. But nonetheless, giving an update here if you are looking at GameStop stock. GME is the ticker symbol on this, down a little over 20%. So on the back of building on what we knew from earlier this morning, they did announce their earnings earlier than expected. Was supposed to come out next week. They are front running this ahead of that live stream that Roaring Kitty or Keith Gill is supposed to do around noon on YouTube. And the other part of this is the filing, though, that they said that they may sell up to 75 million shares of Class
For you,
A
Jess,
stock.
you're so wired in, and Paul just mentioned Top Live for the jobs report.
Yep.
You're completely wired into this, Jess.
I am.
How does he sell legally?
Exactly. And so that's what gets complicated here because he's deep in the money. So the options at 20 would, in order for him to basically below that would to lose money. So the question, why do it now? So the company put this on the table in order to front run this. But if you look from an options perspective, we were actually trying to crunch some of the numbers here. So if he exercises all the options around 40, that's still like 17 million total. So that would be around 680 million in holdings there.
Has he already done it? I mean, is it possible he will announce?
That's
on
what
YouTube
people are wondering during the live stream, if that is what ends up happening. So then if he exercises the day, the stock could potentially rise to 150. So then everybody is trying to potentially buy and cover if that does happen then. So that would be basically kind of like a gamma squeeze that we saw in 2021, where the market makers are trying to buy the stock to neutralize the risk there.
Gamma squeeze played cheap trick like no one. Did you like my questions there, Paul?
Yeah.
I got him from Bailey. He's over at Bergdorf Goodman in the wedding department. But
Exactly. Getting his tux ready. So, I mean, as this kitty guy, does he do these live streams? Is this the first time?
So he this just came out. So he started this live stream. So, it hasn't happened yet, but now he has this YouTube channel that he did not have before. And what I was explaining earlier this morning to y'all, I was talking to securities lawyers that used to work at the SEC about this. So he has some that appear to be disclaimers underneath some of it right now. But what they were talking about is, some of the language there, they felt like either a lawyer didn't write this or not a very good one is what they worded it to me. I'm not going to name the lawyers that told me this because they told me this off the record, but that basically the language needed to be massaged more about, whether he was buying or selling securities.
When is the YouTube broadcast?
Noon, New York time.
And we expect him to talk about his position, his outlook for the company.
Well, see, none of us know yet, but what we're wondering if he does exercise today. So if that's the case and the stock shoots up, we could see a squeeze kind of similar to what we saw in 2021.
We got to summarize the jobs report. Jess Metten flying in,
Great stuff.
parachuting in, I should say,
exactly.
with what'd you say, that kitty guy?
Yeah,
that's probably
exactly.
as
Tom's
sophisticated
favorite.
as we're going to get. Jess Metten there with our equity coverage and a great team. They are Chris Condon leading our economic coverage. U.S. payrolls, unemployment, they pick up. We call it a mixed view of the job market. There's some nuances in there. Ira Jersey alluded to that. But it's just simple. Here's the single sentence from Mr. Condon. The job market has largely defied expectations in the past 2 years, powering the broader economy. And yet Atlanta GDP is sub 2%. I don't get it.
No, I don't
baffled.
either. And that labor market is just, again, as you mentioned, Tom, just kind of defies expectations. And in terms of what the Fed might do, we're seeing it in the bond market right here, the 2-year Treasury, up 14 basis points
14
here, Tom.
now, wow.
We're back to 4.86% on your 2-year. And that's obviously the most sensitive to kind of Fed moves, good indicator.
Still lifting as well. The 10-year yield rockets, the real yield, I should say, 1.99. And we're out to a ginormous 2.12%. That's a substantial lift in the yield structure. Futures at negative 27. NASDAQ futures 0.5%. Let's not forget we're going into the Apple silliness next week, the developer conference. I was not allowed. They said I couldn't go unless I had white sole sneakers.
No, yeah, I don't do that game.
And I just said I don't have them.
No.
Send Ludlow. And
exactly.
So I think Ludlow.
Even David Weston is going to the
Yes.
sneaker route.
You know,
He's
Lisa's
kind of my
doing it.
go-to
Lisa
fashion
Mateos,
plate guy.
You know, she's got Celine sneakers.
There,
Oh, look at them. Ari, get those up there.
Yeah, the
now,
folks like on YouTube.
Fashion forward.
Look at those kicks for Lisa Mateo.
Yeah, they show my real shoe size, which is ginormous.
They're glory. They're glory sneakers. Sweeney medicated after the disastrous song of the last hour.
Yeah, we're better.
Let's make Paul happy. Glory days. Mr. Springsteen, good weekend to you. Futures negative 26.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. Post-Jobs Day. Is the weekend started, Paul?
Almost. Give me three more hours, and then we'll be started down on the Jersey
Paul Sweeney
Shore.
at 10 a.m. They're looking forward, and of course, we'll have into your ending of that show. You will have Roaring Kitty as a guest.
Hopefully, we're efforting that, as they say in the business.
Maybe he'll start early and keep it going. We say good morning to you on a Friday after a bang-up American jobs report. Markets adjust. Futures at negative 22. The yield space higher. The Sweeney yield, the two-year yield, 4.86%, now up a solid 14 basis points. So Bloomberg Surveillance this morning, and we're brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RRA. With our business flash, Lisa Mateo.
And we've got futures falling, yields spiking higher. Payrolls came in much stronger than expected. Let's get to the numbers. We have NASDAQ futures down 0.4%, 77 points, 18,984. Dow futures down 0.3%, 147 points, 38,810. S&P futures down 0.4%, 24 points at 5,340. Let's look at the bond market. The two-year yield 4.86, down 14 basis points. We have the 10-year yield at 4.42%, and that's up 14 basis points as well. Want to take you over to GameStop. Those shares have really taken a dive. They've reached more than 30% in pre-market, now down 19%. That company announced it's going to sell up to 75 million additional shares. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Paul, your thoughts on the jobs report and the yield lift that we've seen?
Boy, resilient, I guess, is the word that comes to mind for this U.S. labor market, up 272,000 jobs here.
It is. The resiliency absolutely captures. Can we do a group shout out? Ellen Zentner nailed this.
Oh, yeah.
At Morgan Stanley. Julie Pollack at ZipRecruiter.
Yeah, we had some smart people.
Nailed it. And to state it, and Anna Wong was very good on this, she said it's going to take time to get the revision adjustment that she's writing about is now. It is a tradition. She's acting labor secretary for President Biden in conversation with our Joe Matthew, whose balance of power heats up into the summer. Here's Mr. Matthew with the Labor Secretary.
We are here with the Acting Labor Secretary, Julie Su. And Secretary, it's great to see you this morning. Thank you for joining us on another Jobs Day. We've got a bit of a mixed signal here in this jobs report. More payrolls than expected and a higher unemployment rate than expected. Which survey, household or establishment, is reflecting reality?
Well, this is another very strong jobs report. I'm not going to get tired of coming here and telling you that we are continuing to experience very strong, stable, and steady growth. So it's 272,000 jobs created last month. The unemployment rate has remained at or below 4% for 30 months straight. That's still the longest since the 1960s. And at the same time, real wages, over the year are up 4.1%. So workers are doing better in an economy in which the president has said, when we focus on workers and worker well-being, we're going to do what's right for the economy and for the country.
When you look under the hood, you find that 400,000, even more than 400,000 people left the labor force in May. The participation rate is not back where it was before COVID right now. How do you explain that?
Well, so let's say, the prime age labor force participation rate remains very, very strong. And it's worth noting that, again, women's labor force participation rate hit another historic high. So last month we said it was the highest since 1948 when this data was begun to be collected. It's now a little bit higher than that even. So women continue to power our economic recovery. At the same time, we are seeing, again, strong participation. People are in the job market. People have come off the sidelines. People are looking for jobs, and they're finding them. Where there has been a little bit of a very small uptick in the unemployment rate, again, still at or below 4% for the longest stretch in decades, but has to do with young people ages 20 to 24 who are in a bit of transition, really, if we think about May, right? May is a period of transition for all of us parents with kids who graduate and maybe move and are looking for different jobs during that time.
You can tell a great story and put a great headline number on that unemployment story, as you are right now. But when you look under the hood, you do see some elements of weakness compared to the payroll survey. And I wonder, while you're happy where it is now, if you worry about where we're going to be 6 months from now, if this is a slowing job market.
Well, the payroll survey really is the gold standard when it comes to the unemployment rate, right? This is the, it's the largest by far of any data set, including the household survey, that is used. And so, again, I don't think there's any way to paint this as other than continued strong, stable, and steady growth under President Biden's leadership, and proof of his theory that if we invest in America, we can create good jobs in communities and, crowd in private investment in order to do that. And as I travel the country, I'm seeing the benefits of that.
We've talked a lot about the impact that immigration has on our job market. Can be for better or worse, depending on the trend that you're looking at. And there's an analysis from Steve Englander at Standard Chartered Bank that we looked at this week that estimates about half of the job growth since October can be attributed to undocumented migrants, that it's somewhere in the area of 109,000 a month. If the president's executive order put in place just days ago lowers the threshold, lowers the numbers of undocumented immigrants entering the country, what does that mean for the job market? Do you see numbers like that in your modeling?
I mean, I haven't seen that study. I would actually question those numbers based on what we see. Right? This is a situation where, one, we're not talking about dividing a small pie into smaller pieces. We're talking about a much bigger pie overall. So more jobs, more people in the labor market, more opportunity for all. Since the president came into office, again, we've talked about this, about 15 million jobs created. That is a 15 million families, 15 million individuals who are having the benefits of a good job that might not have had that before. I would also say that it is true that there has been, immigration-based growth also, and that has been true throughout our nation's history, right? That immigrants have helped to do jobs and help fuel the economy, but the majority of this job growth that we're talking about has gone to native-born workers.
Well, talk to me about the other side of this story, and that's immigration reform. H-1B, H-2B. We spend all day talking about border security in Washington. What does our job market need in terms of attracting talent from other countries legally?
I mean, it's such an important question, right? This is why, since day one, President Biden has called for the kind of comprehensive immigration reform that would address, some of the challenges that our system has created.
What would our job market look like with that help?
What would our job market look like with
if you got that reform?
Right. Well, so we do we have in this administration increased the number of H-2B workers that have come in. We recently did a rule around H-2A workers, making sure that when migrant workers come to this country through legal means, that they're also protected, right? That they are protected for their own good, but also so that their being here doesn't take away from the good wages in those industries. So we, but the bigger picture is that there does need to be comprehensive reform. The president has called for that, and frankly, Congress needs to do its job.
There's something that I don't want to get too deep in the weeds called the birth-death model that our analysts at Bloomberg Economics are looking at that would suggest some of the companies that we've seen closing might not be reflected yet in the numbers that we saw in this monthly survey. Based on layoff announcements, corporate closures, where do we look in the middle of summer when these numbers start to emerge?
Well, we will come out every month to report the data that we have, but everything that we have seen this past month, this past year, as well as, the last year since President Biden came into office is historic job growth. More jobs created during the same time period than any president in our history. And continued low levels of unemployment. Again, historic lows. And more opportunity to come, right? The investments in the president's Investing in America agenda, many of them are still coming out. And that's why this summer I'm going across the country talking about Good Job Summer and focusing on the importance of what a good job does for families.
The Good Job Principles Summer Tour. You're like Beyonce. You're launching a national tour, and it's not a mistake. I see some of the states you're going to, like Pennsylvania and Michigan. What is your message to voters in those states?
Well, my message to working people is that we see you, we have your back, we know that you have talent and desire, and we want to create the kinds of opportunities that will allow working people to have a good job where they can be paid a living wage and live a secure life. And our message generally is that when you build a workforce that is ready, that is trained, that is skilled, that pulls the full talent of the American people, it's good for employers, it's good for our economy, and we see that time and time again in these jobs numbers.
Yeah. Getting back to the household survey, which is important to us and our viewers and listeners, the fact that it reflects agriculture, the fact that it reflects what's happening in people's households, does that not raise the level of importance of the household survey at this point when we look at that against payrolls to get a sense of not even as much where we are now, but where we're going?
I mean, I think the bigger, the answer is the payroll survey is the survey that tells us how many jobs have been created, what industries they've been created in. And again, the growth we're talking about is not just single industry, right? It has been for the entire time, but certainly this last month is no different, very, very broad-based. We saw growth in leisure and hospitality. We saw it in construction. We saw it in professional services. We saw it in healthcare. And so, there's really, the numbers don't lie. It's really, a broad-based, solid, continued growth. And I think that coveted soft landing that so many people bet against.
Well, I haven't even mentioned that yet. It's my job to ask you if we're in the soft landing. I haven't heard words like Goldilocks this morning. What's your broader 30,000-foot view on that? You're looking at your slice of the economy, that's the labor market. Is a soft landing intact?
I think so. I mean, again, it's the kind of thing where we're always vigilant about where the economy is going. But based on where we were, remember, in 2021, right? The president came into office, COVID was raging, there was no national strategy to address it, unemployment was very, very high, people didn't know if they were going to get toilet paper if they went to the supermarket. And now we have historic job growth, low levels of unemployment. I think it is the very definition of a soft landing.
You mentioned COVID. It's not the first time we've brought this up as a barometer, maybe a baseline for where we are now versus where we were before the pandemic. It's still impossible to forecast, isn't it? You see these payroll numbers blowing off the charts based on estimates not just by the government, but by Wall Street and economists who are a lot smarter than I am. When will we be able to get a handle on what comes next?
Well, I mean, I think the reality is that's why we don't look at any 1 month's numbers as over relying on them to tell a story. But the story of this economy from January 2021 until now is of steady, stable growth, shared prosperity, and more investments to come. We know that that there's more work to do. We're also seeing the lowest levels of black-white unemployment in a very long time. So it's equitable growth too, and that matters a lot.
What would a second Biden term mean for the job market?
I think we continue to deliver, right? We continue to build a strong economy. We continue to invest in American industry in a way that hasn't been done in decades. So building, restoring roads and bridges, making sure that every family who turns on the faucet gets clean drinking water, making sure that everybody breathes clean air and has access to high-speed, reliable internet. Those are the kind of infrastructure investments. We want to build the things that we invented, right? So bringing manufacturing back to the United States, I think it means, continued opportunity for the American people.
Will you still be in this building if there's a second term?
Well, I don't want to make predictions about that. I do serve at the pleasure of the president, but it has been an honor to help to deliver on that vision.
Well, I'm glad you could join us on another Jobs Day, and we'd love to meet you back here in a month.
Thank you.
Thanks for the time, as always. The Acting Secretary of Labor, Julie Su.
Joe Matthew with Julie Su. Interesting discussion there. A little bit of pushback from Mr. Matthew. I mean, there's a message there from the administration, but the president's going to fly back from France. There's a state dinner, I believe it's tomorrow in Paris. I assume a tired Joe Biden with all the emotion of Normandy flies back to a nation that's developed 240,000 plus jobs every month for the last 90 days. I don't think, Paul, if somebody's sitting with him in the Oval Office on Monday, he's going to go, how or why? Do we know? I don't think we do.
It's been a solid, consistent, resilient job market. And I think if you're the administration, I'm just not sure that message is getting out there to the degree that they would probably like, because it is. I'm looking at the unemployment rate. It did sticks right there. It's actually up at 4%, but still pretty solid. Wages are up 4%. 4.1%. So a solid labor market.
Welcome all of you on YouTube. Search Bloomberg Podcast. Subscribe to Bloomberg Podcast. One of our interns, Bennett, killed it today with guest sequence. Because right now we're going to look much more, almost philosophically, at what this boom labor economy means forward for your investments. Nicholas Colas is co-founder of DataTrek Research and joins this morning. You know, Nick, there was a phrase from another time and place that it's a morning in America. I guess it's a morning in America for a select group. How narrow are the haves right now in America? Bang up jobs report, bang up consumption. We see it across the tri-state area. But how are the haves doing as we go into the summer?
Certainly, the haves are having it all. I mean, it's a very good market. It's a very good economy for the upper 20% of the income distribution. But let's be fair, it usually is, right? The wealthy tend to have an easier time of it. The bottom 80% have not had an easy time of it. And we see that in data like gasoline consumption, for example. Gasoline consumption has actually been down year over year for the last 2 months. So as much as the top 20% are doing well, there is a lot of stress in the broader market.
Paul Sweeney, bank rate 30-year mortgage, 7.56, April 25th. And in 2 cups of coffee, we're down to 7.25%.
Yeah. It's still not where we needed to go for a lot of folks. So, Nick, given some of the economic data we've seen, and we've got a Fed Reserve that says it is data-driven, how do you think the Fed plays it out over the next several months?
I mean, it's pretty clear at this point. This jobs report doesn't leave a lot of room for interpretation. Let's put it that way. The economy, labor market's still strong. Demand for labor is still strong. Wages are still strong. They have to, at best, be on hold, which will be interesting to see how many dots or how many cuts they put into the dot plot next week. I'm guessing it's 1 now, not 2. And they've got to play it pretty close to the vest and acknowledge the fact that as much as they want to see the economy slow and wages slow and inflation slow, it's happening only slowly.
Right. Nick, we see the 2-year Treasury moving higher by 12 basis points today to 4.84%. But we've seen all year this equity market can perform with rates at those levels, even a little bit higher. So how do you think about the equity market for the remainder of this year?
You know, I think large caps certainly still fine. The S&P 500, absolutely fine. It's up, call it 12% year to date. In the face of higher rates, as you point out, we've got the Gen AI story, we've got NVIDIA, we've got all those things pushing large caps higher. Small caps, not so much, right? Russell's up, 2% year to date? It's telling a very different story. It's telling a rate-sensitive story, as it always does. And so the rest of the year feels very good for large caps and kind of not for small caps.
Nick, there's such a respect on the street for your research across assets. What is the character of this bull market?
The character of this bull market is very narrow, relatively speaking. Actually, we just did a piece for clients last night looking at the whole decade's return so far, all of the 2020s. Because let's face it should have been a really bad decade. It's turned out to be a pretty good decade, but it's narrow. So it's Lewis large caps, not small caps. It's Europe is doing okay, but emerging markets are not. For every India, you've got a China. So it's a very narrow rally, and obviously bonds have gotten destroyed for the last 4.5 years. Going forward, I think it'll still be narrow. It's going to be narrow till U.S. large caps, U.S. technology, and hopefully we get enough of a pullback in rates to get bonds to work.
But I can't say enough, Paul, how this is a Nick Colas difference, and that we have so many people rationalizing a destroyed bond market, price down, yield up 4, 5, 6 standard deviations, by looking at spreads, looking forward, forget the past. And what I hear in emails and on YouTube, so many people are underwater in some way or form with bonds.
It's tough to claw back to what happened from 2022. But Nick, I go out and buy a 2-year Treasury. I'm getting near 5% here today. What's wrong with buying some fixed income here these days?
I think you're right. I think it's a great trade. I think 2 years are probably the easiest trade on the planet right now. 5% risk-free. No need to worry. No need to fuss. Maybe U.S. equities do 10, but you're getting 5 for doing absolutely nothing and taking no risk. So 5s feel pretty good. The interesting part of the curve, obviously, is 10 to 30s. What do we do with TLT, or the longer end of the curve? And I think you can own that section of the curve here. I don't see inflation ricocheting higher again. And I think you'll make a little bit after inflation, even at the longer end of the curve.
Hey, Nick, so in the equity markets, you talked about the breadth or the lack thereof breadth. I mean, I learned in business school, that's not a good thing. I mean, doesn't this market have to see a broadening out here? Or we're set up for maybe a big fall somewhere along the line?
It's a great question, and you're right. I mean, the classic theory is, you want rallies to be broad-based. We just don't have a broad-based equity story right now. We have one thing. We have generative AI. We have one stock. We have NVIDIA. And so the philosophical or the fundamental leadership here is sound. It's a good idea. Gen AI is a powerful trend, but there's not a lot of ways to play it. So you have a very narrow set of leadership. It's basically, as we all know, 5 names. So I don't think that's necessarily unhealthy, but it does mean like small caps aren't a way to play Gen AI. There's very few Gen AI plays in small caps. You got to go large caps.
Nick, on a reading list this weekend for all of Wall Street's Michael Mauboussin over at Morgan Stanley doing a wonderful study. I've already read it, folks, on concentration in the market. Nick Colas, how do mere mortals, I mean, forget about the phrase a carefully diversified portfolio or balanced portfolio. All this mumbo jumbo from 30 years ago. How do you partake, Nick Colas, given the concentration that Michael Mauboussin writes about?
Yeah, well, first of all, I've known Mike for 30 years. He's a genius level intellect, and that's a great piece to read. Putting that aside, what he says is, the way the stock market's behaving is rational. We are getting a lot of profit growth in technology and generative AI kind of themes. So it doesn't say it's fairly valued or over or undervalued, but there's a reason why stocks have worked out this way. And the question is, will it continue to work out this way? Will we have this concentration of returns? And the short answer, I think, is yes. Where else does human innovation kind of hit the fulcrum point of profitability harder than in technology and Gen AI? That's why tech works. That's why the stocks are working.
Nick, don't go away. I got to scream out on YouTube. They're like, Tom, give us a data check here with all that we've done here with the labor secretary. We missed that. Here's what you need to know, folks. Futures are negative 20. They're now improved. Negative 12 off the shock of a boom jobs report. The VIX 12.83 as well. NASDAQ doing better, down only 0.2%. The Sweeney yield 4.84% on the 2-year yield. The 10-year real yield 2.11%, up a solid 10 basis points. I got to bring it up, Paul. I mean, we're going to get an $80 print on Brent crude.
Yeah.
I mean, we were looking at $69 in West Texas. Intermediate didn't get there. A little, lift oil here in the last couple of days.
Tom, I got to ask Nick this question. Nick, you're at Haverford College. You call up your parents and you say you want to major in Near Eastern archaeology. What did they say to that?
They were oddly accommodative. I got to give them a lot of credit. They said, do whatever it is you want to do. And I think it's because they knew me well enough to know that that wasn't going to be the end point for my career. They knew that ultimately I wanted financial success, and I wasn't going to get that as a professor. And so they kind of trusted their judgment, and they were absolutely right. It was a great thing to major in.
And then Nick barbelled that. He saved the day by getting his MBA from the University of Chicago.
Yeah, so, that'll do it.
Yeah.
So Nick, we're going to walk away from you here right now, but let's get one final question in. Do you suggest in the Near East that Iran will continue with a theocracy, or can they find their way back to a more representative government?
Oh, police states are very difficult to unseat, unfortunately. I think for the people of Iran, they're going to have to live with that government for a while longer.
On international relations, Nick Colas. Thank you so much, Nick. Greatly appreciate it. And I always say this, we protect the copyright of all of our guests. You can get Nick Colas's work at DataTrek, because I'll get 4 emails. Can you send me Nick's report?
Yeah.
Can you send me Nick's? We don't do that.
No.
We protect this is how they get paid. This is how Nick Colas pays them.
A lot of smart people I know on Wall Street read his stuff religiously.
But what's the mortgage rate do after this shock report? I mean, my head's spinning. I mean, still spinning from yesterday's news flow.
Right. And this, you think about this job report here. Again, it just kind of goes to the question of this economy, despite all the challenges and all the negative headwinds you hear about there, and maybe some of the rhetoric from just folks out in the marketplace where it's tough out there, and it is. But, from a labor perspective, it feels like, and the data seems to suggest that, if folks want a job, there's jobs to be had out there. And if you're looking for some growth in your wages, this is a market where you can get that.
Did you hear what Nick Colas said, though? I think it was early in the interview. We were talking haves and have-nots, and he modeled 20%, 80%.
Right.
80% struggling in America. And to go to one of the big shocks of the week, the Modi stunning defeat. I'll use the word, the defeat of Modi as he forms a coalition government in India, all of the experts, including Raghuram Rajan, say it was job formation of the have-nots. Why is it any different than India?
Yeah, I agree. And so it's, we've heard it here before, as we're in an election year, it's the economy, stupid, and here it is, the haves and have-nots.
Raghuram Rajan writing 14 pages for Foreign Affairs just in the last couple days, and he says, look, here's the fact, Mercedes-Benz has record sales in India.
Yeah.
I mean, it's the same polarity in India.
Yeah.
As we have here, except we don't think we have polarity.
No, and here in the U.S. it was all about the middle class, but it just feels like over the last, call it 20, 30 years, that's been pressured.
That would be a great study to say by Pew Research now or
Yes.
Gallup. I mean, what is the middle class? We'll have to see. What we need to do is get to the next half hour. Paul Sweeney at 10 a.m. on Bitcoin.
Oh, yeah.
On LIBOR. There'll be economic data. There'll be some interesting conversations to say the least. We're on YouTube. Subscribe to Bloomberg Podcasts. Search Bloomberg Podcasts. And we say good morning from New York City. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how will the markets react to a blockbuster U.S. jobs report? It showed employers added payrolls of 272,000 last month compared to the 180,000 expected. The unemployment rate increased from 4% to 4% from 3.9%. Things are just getting started here, so let's get right to the numbers. We'll start with the S&P 500 down 0.2%, 13 points at 5,339. We'll get to the Dow down 0.1%, 66 points at 38,818. And finally, the Nasdaq down 0.2%, 50 points at 17,121. We have to take a look at the bond market. The 2-year yield 4.83%, up 11 basis points. We have the 10-year yield 4.40%, and that's up 11 basis points as well. At the open, also want to check in with GameStop. They're now down 19%.
Please.
That is your Bloomberg opening bell report, Tom and Paul.
So what does that mean? What is it? It's down 19% from yesterday, and it must be down 40% from 5 a.m.
Yeah. And so the question is, if you're the bankers here dialing up institutional investors, hey, I got 75 million shares for sale. Right. Where do you want to buy it? So I don't know how that phone call goes.
Joining us now, Tiffany Wild in PIMCO. Tiffany, off the PIMCO desk in Newport Beach, is anybody trading meme stocks? Jerome Schneider? I can just see Jerome.
We're a bond shop.
Well, you're a bond shop, but maybe meme stocks are bond-like.
Yeah, exactly.
Tiffany Wild, what a jobs report. There's something wrong here. Maybe it's productivity, maybe it's technology, maybe it's migration, immigration. What's the something you're thinking about to describe a boom job economy?
Yeah, I mean, so I do think, obviously I always say any one report can be noisy, but this labor market report, I think overall, just shows that we still have tight conditions in the labor market in the United States. You have wage inflation, which appears stuck around 4%. That's elevated relative to the Fed's 2% inflation goal. And you have jobs that are, they're continuing to be created. Now I would say that, there's some differences between the household survey. There's two surveys underlying this report, the household and the establishment survey. But when you kind of look at them all together, I still think overall the picture is pretty solid here for the U.S. economy.
Tiffany, who's hiring these people and where are these people coming from? It just seems, I think, if you ask most market participants, they're like, boy, this labor market's strong, and why is it so strong?
Yeah, well, I mean, I think that, obviously the underlying economy is strong as well. And certainly the flow of, the increased flow of immigrants, in the immigration numbers that we've seen over the last, year has been a very big contributor, I think, to not only to growth, obviously, but keeping labor markets going. It's created more labor supply. And obviously these people not only are supplying their labor, but they are consuming in the U.S. They're living in the U.S. So it's boosting overall economic activity.
Tiffany, tell Jerome Schneider GME is halted right now. That's an automatic halt, Paul, right?
Exactly.
It's like something's triggered.
Yeah, so it's just
GME halted.
Volatility. So Tiffany, as we step back here, how do you think our Federal Reserve is going to, take in this data point we got today? And as Tom Keene likes to point out correctly, even if you look at it on a trend basis, still pretty darn solid. How do you think the Fed's looking at the labor market?
Yeah, I mean, I certainly think that, maybe there was something for everyone in this report, but overall, our view has been that, we had sticky inflation in the first quarter, a reacceleration. That looks like that's coming back down, but ultimately the Fed needs more confidence around their inflation forecast, and inflation's going back to 2, and it's probably going to take them a little bit more time to get that. And the fact that labor markets are continuing to be strong, we're seeing cyclical sectors in the economy, so not just government, healthcare, education, but cyclical sectors reaccelerate a little bit. And that is, we think that's the markings of a pretty strong economy here. They need the economy to cool off, and so it's going to take them a little bit longer, we still think, in order to get that confidence. So, our view has been that there's going to be some significant movement in their projections for the rate path, and we still think that's going to be the case.
Tiffany Anna Wong, out of Booth School in Chicago, economics, has done terrific work for Bloomberg, and she's looking out months and quarters it revisions due to a flawed birth-death model. And I want to emphasize, folks, Anna Wong did not predict today to be a soggy jobs report. She decidedly did not say that. But Tiffany, is there validity that maybe we've got the countable jobs in America wrong?
Well, so I think depending on what I said, there's two surveys that underlie this report. Depending on which survey you look at, the level of unemployment and the increase in jobs that we've gotten over the last year is very different. The household survey is, more or less flat, where the establishment survey is up, I think, over 1 million. So that's a very big gap. I think that the truth is somewhere in the middle. Data that we get on, early data that we get on potential revisions for the establishment survey suggests they're going to come down. But I think the fact that the household survey doesn't pick up immigration that well and on a real-time basis suggests that survey is probably being underestimated.
Okay, so
there's some. I think the overall there's truth is in between.
A totally unfair question. I don't want you to get in trouble, but let's go there. On non-farm payrolls, what is the plug-in for immigration at the margin? Is it 30,000 per month? Is it 10? Is it 100,000? How do you measure that?
Yeah, well, I mean, I think that there's two key questions here. Obviously, one is what is the number of folks that are coming into the U.S. economy? Last year, we think it was about 3 million that were asylum seekers in addition to the visa issuances. But however, there are big backlogs to those folks that are to get work permits. So in terms of at least legal working, we think about just under half of those folks were able to get a work permit. So that would suggest, maybe 75 to 100 additional bump per month of folks that are coming into the labor market to get jobs, over the usual trend of call it 100. So I would say an underlying pace of maybe 170 is kind of the neutral rate at this point for the labor markets.
Wow, interesting. Tiffany, so if this is a fully employed economy, how does that translate to how the consumer is doing? How do you guys think about the health of the U.S. consumer these days?
Yeah, I mean, I think overall the consumer is doing quite well. Certainly different income levels are doing better than others. And you guys were kind of talking about this earlier in the program, but there's definitely increasing evidence that the lower end consumers are struggling. They are, we're seeing them move or transition from current to 30 or even 60-day delinquencies on their credit cards at higher frequencies. But one interesting thing is that, some of them are then transitioning back to current. So we would argue the lower end consumer is hanging on right now. The reason why it's hanging on is because the labor markets are so strong. And labor markets are so strong because demand in the economy is still there. So ultimately we think it's we're still kind of going here at a pace of sort of 2% inflation. Things are slowing. Immigrants, the Biden administration just put out an executive order which makes coming into the country much more difficult now. So that impulse will fade, growth will slow, but I guess overall we would say that the domestic consumer here is still doing okay.
Tiffany, thank you. Tiffany Wilding with PIMCO there on our strange American economics. Well, Paul, I go back to what you said. I think you said it Monday coming in off a social weekend. The anecdote is just there. The restaurants are packed. Like you can't get in.
No, and but what's interesting is there certainly is a bifurcated economy out there. I just read a wonderful piece in the New York Times yesterday about the New Jersey fishing business, commercial fishing business, and it's kind of and the problems they're having with fentanyl actually in that fleet. But it talks about some of the folks in that industry, and that's a tough business, and a lot of folks in that industry really down on their luck and are really scratching by and having a hard time dealing with inflation. It's a great piece, really gets into some depth there. And that just highlights for me that there really is, a dual economy out there with the haves and have-nots, and apparently, this inflation really, really hitting hard on some of those folks at the lower end from an economic employment level. So, when you see average hourly earnings up 4.1%, that's higher than the inflation rate, and that's the good news. But for a while there, the reality is prices are higher, and that's hard on a lot of folks.
Over for trading. And I guess the stock market actually a little better than I thought. The VIX 12.73, down negative 100, SPX negative 17, NASDAQ down 0.2%. But not like the bond market. The bond market's, let me look at the Sweeney yield here.
Yeah, the 2 years moving. We got the up about 12 basis points.
12 basis points. So,
Yep,
bond market's talking more than the stock market right now. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Biden apologized to Ukrainian President Volodymyr Zelensky for the delay in military assistance that allowed Russia to make some battlefield gains. The two leaders met in France during a visit to attend ceremonies marking the 80th anniversary of D-Day.
I apologize for those weeks of not knowing what's going to happen in terms of funding, because we had trouble getting the bill that we had to pass that had the money in it from some of our very conservative members who were holding it up.
President Biden told Zelensky that Americans stand by Ukraine. Federal prosecutors are wrapping up their gun case against Hunter Biden, with 2 more witnesses expected today in their effort to prove to jurors that the president's son lied on a mandatory gun purchase form when he said he wasn't an unlawful user or addicted to drugs. Prosecutors are still planning to call the drug expert and an FBI chemist. Their testimony will cap a week that has been largely dedicated to highlighting the seriousness of Hunter Biden's drug problem through witness testimony. He has pleaded not guilty to 3 felonies. The Optica Foundation says it will no longer accept money from Huawei Technologies. Bloomberg's Amy Morris explains.
Optica made the move more than a month after Bloomberg reported Huawei was the sole funder of the foundation's research competition, which has awarded millions of dollars and attracted hundreds of proposals from scientists all over the world, including at top universities that banned their researchers from working with Huawei. It was a strategy Huawei used to stay ahead of cutting-edge research despite U.S. restrictions. The Optica Foundation will also return all of the money that Huawei donated for 2024 and the previous 2 years. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Canadian Grand Prix. Does anyone care? I feel Formula One's slipping away. The Netflix thing, you remember? They did the Netflix thing, and it's slipping away.
I got to stand up for F1. Here I go. I know people said Monaco after lap 1 was a boring race. And
yes,
granted, but I mean, yes, you have races like that. Yes, where tire wear is going to come in, and you have to do all that. That's part of racing. Not every race is going to be a crash bang smack 'em up kind of race. And the strategy and the art of the sport, is what's important to me. But anyway, yeah, I'm not gonna lie.
They had a woodchuck out. They were doing like pre-tests, and they had like a woodchuck out on the track. It's Montreal,
I just watched the movie Ferrari, so now I'm a little bit more into it.
Oh, yeah.
Very good.
Yeah.
They're loaded for next year. They're bringing Sir Lewis over from Mercedes to there with Leclerc. And the big news this week is Mr. Perez of Mexico was re-signed by Red Bull. So, I'm psyched for Canada.
Good, yeah. And again, you could invest in Formula One through Liberty Formula One, publicly traded stock.
Which brings us to come on, folks. Let Mario Andretti get a team in there.
They're trying.
I hope so.
Why wouldn't you let Mario Andretti's team?
That's a very, very good question.
All right.
And so we'll see.
You. Our surveillance Indianapolis 500 reporter Michael Barr weighs in on Midwest auto racing. We weigh in with a data check, -25. The tape deteriorates in the last 5 minutes. The levels here, 38,800 Dow, 5,300 SPX, 18,900, almost up to 19,000 on the NASDAQ 100. The VIX, 14, 13, 12.60. That's a wow statistic. On a Friday after the jobs report from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have the markets under pressure. This is after a surprise showing of strength in the U.S. Labor Department non-farm payrolls. They advanced 272,000 last month. So we have the NASDAQ down 0.2% at 17,130. We have the Dow down 0.1%, 38,848. And we have the S&P 500 down 0.1% at 5,344. The bond market, the 2-year yield, 4.85%. And that is down, just got an alarm here. That is down about 13 basis points. The yield on the 10-year, 4.42%, and that is up 14 points, up, not down. Over to the Lyft, kicked off its first investor day yesterday, said it's expecting a 15% growth in bookings over the next 3 years. Those shares up 6%. They're getting a lift of their own. We have Taiwan semiconductor manufacturing. They're up about 2%, just about. May sales rose 30% thanks to strong demand for AI, also recovery in some consumer electronics. And shares of ski operator Vail Resorts, they are falling down 11%. That's despite Paul's ski trips down this morning, missed revenue estimates, and is cutting guidance for the full year. And yes, today, Jobs Day, but did you know it's also National Donut Day, which means free donuts at places like Dunkin' and Krispy Kreme. There you go. You're welcome. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciate it. On Jobs Day, and down negative 48 now. It's just sort of like a Friday feel to it. Paul's going to keep it exciting after 10 o'clock. Jeffrey Cleveland joins right now, Chief Economist Payton and Rigel in Los Angeles, and joins again with a different view that is valued. You're out on a left coast, Jeffrey Cleveland. It's an extraordinarily different economy. When you see a surprise boom jobs report, are you surprised?
I'm not surprised. I think this is consistent with the other data we've been seeing the last couple of years. The economy remains strong. If you focus just on California, you could look at the unemployment rate here. It touched around 4%, Tom, in summer of 22, and we're now up to 5.3% on the California unemployment rate as of the latest reading in April. So we have seen a rising unemployment rate here. Could be due to some of the tech sector weakness. That's definitely one culprit that maybe California has suffered more directly from than the nationwide figures. But I think the nationwide economy is solid. 272,000 on payrolls. You can't complain too much about that.
Jeffrey, is this labor number and the trend we see in the labor, the consistent trend we see in labor, has that removed any rate cuts from 2024, do you think?
So we only have one in our call at the end of the year in December. So that's all we have. I know there's others out there touting multiple rate cuts. I think the reaction in 2-year yields this morning tells you the bond market is disappointed and it's rethinking the probability of rate cuts. It's pushing them out. I think it's entirely plausible. We'll go through the whole year without getting rate cuts. I mean, when you have 272,000 jobs added, you're near all-time highs on equities. Inflation is still a problem.
Right.
What's the case for a rate cut here, in my view? The bond bulls that I talk to, they tell me, well, a slowdown is underway in the economy. I don't see that in payrolls. We definitely see that in labor demand. You see that with the JOLTS data earlier in the week.
Yeah, but where are you on GDP? I mean, the heart of the matter in the CPI next week in the Fed meeting is Atlanta GDP now is cratered from 4-ish, nobody believed it, down to under 2-ish. Are you modeling a sub 2% real GDP?
I'm objecting to the use of the word cratered. We were running way hot, 4%. Now, we're 2%. We're using 2%. We think that's a reasonable guess for the quarter. I think that's a reasonable guess for the year. Q4 to Q4, I think we could top 2% this year. So that's where we're at. We got the unemployment rate at below 4% at year end. So with that backdrop, it's hard to really have rate cuts in your forecast. So
how about the consumer, Jeffrey? A lot of talk and a lot of evidence suggesting that there's really kind of two consumers out there, if not more, and the lower end, it's probably more of them than we think out there, and they're struggling with this inflation data. What's your view of the consumer?
The claims of the death of the U.S. consumer has been greatly exaggerated once again. That's the one-line response. I mean, we've been hearing about consumer weakness for a while. Consumer spending is still holding up quite well. I'm actually, pretty impressed with how it's held up. I think you have to look at income, which still is growing. Some of the lower income cohorts are still seeing income gains. As inflation has come down, those are real income gains, so that's good. But I think you also have to think about the consumer in terms of their debt obligations. So, we like to look at financial obligation ratios for households. Those look very manageable relative to history. So we haven't seen a big rise in debt obligation ratio, so that's good. People's asset values have gone up, so that helps. I still think people have savings, so that could help as well. Right. So on all those fronts, I think the consumer is still in pretty good shape.
Paul, I just look quickly here at 3 stocks. I'm not going to mention their names, but they're part of the Magnificent Seven. All 3 stocks basically are on the bid, a little bit with green on the screen, off of bonds going back up in yield, and the stock market, the Dow's just fractionally down negative 52. I'm sorry, there's an effort. John Riding of Breen would say there's an ambiguity here. You can have some tensions in the economy and still prosper. Yep. And that's what the tape is telling me right now.
I think it was. I mean, we were futures looked really weak kind of going into the market here. Now we've got the S&P down only 4 points. So as a lot of folks are saying, this is a market that wants to go up. Jeffrey, how do you think about the U.S. economy vis-a-vis some of our big partners in Europe, in Asia, particularly China? It just feels like the U.S. economy, we've heard the term economic exceptionalism. Is that kind of in line with what you're looking at?
Yeah, I mean, you look at the U.S. compared to major peers since 2019, U.S. real GDP growth has outpaced virtually all of them, with the exception of Australia. I think Australia's outpaced the U.S., so kudos to them. So the U.S. looks strong. The big question a lot of clients and internal colleagues asking this week is, well, the Bank of England, the ECB has cut rates. The Bank of Canada has cut rates. Is the Fed next? And we've just been saying, those central banks can go their own way. I think, the argument that the U.S. economy is much stronger is sound, and the case for rate cuts here is much less compelling in our opinion. So that's fine. I think also the argument that there's going to be a string of rate cuts by some of these other global central banks might be premature as well. Right. We have our chart of the week out this week. You could dial that up on the socials, and we're just looking at underlying global core inflation. It's still above the pre-COVID trend globally. So I think that's still something that people need to consider.
Great brief. Jeffrey Cleveland, thank you for wrapping up our jobs report in this 9 o'clock hour Wall Street time. That's not a small matter. The ECB cut the interest rate as their inflation forecast went up.
Yeah, a lot of
that's not a small matter.
No, that's
like original.
Yeah, exactly. Typically, like they cut into what they think is declining inflation there, but they made a promise. And a lot of bond traders I talked to said, they made a promise and they want this keep that promise to the marketplace.
I mean, I've been sort of numb today. Sweeney's got me through the show today, folks, because yesterday the news flow was extraordinary.
Exactly.
I mean, this was a breath of fresh air just having a jobs report. Of course, our global technical director, Steve Gonzalez, and he's been, he's in charge of the songs and all that. Our intern is Bennett Malo.
Okay.
He's done a great job here.
Sitting in.
Good.
We're not sure he can sit up yet. We're not sure he's in the calling stage.
Well, that was because of the Thursday night. You go out on Thursday. If you're an intern, you're out on Thursday night until, you're up all night. Till 2 a.m. or that. But it's been interesting to say the least. They got a lot of comments on yesterday's broadcast. Thank you for the comments on our coverage of the English channel.
Yep.
And all there from Portsmouth on over.
And around at 10 a.m., President Biden's scheduled to speak at Normandy, and when he does that, we will bring that to you, Tom, in the simulcast.
It is a symbol of the Rangers, who so many sacrificed going up a cliff at Normandy. It was a singular battle.
A Ranger, there's nothing a Ranger feels that he or she can't get over or can't climb. So, but I can't imagine being the person that ordered them to do it. Order them to go scale against those defenses. Yeah. Just the decisions that had to be made were made.
Have a good weekend. We're all New Jersey on our music today. Thank you, Mr. Springsteen. John, good morning.